Uang rupiah telah menjadi bagian dari sejarah perjalanan bangsa Indonesia. Sebelum rupiah hadir, pemerintah Indonesia mengeluarkan Uang Republik Indonesia atau ORI sebagai mata uang nasional pada tanggal 30 Oktober 1946. Berlakunya ORI menjadi simbol berakhirnya mata uang asing milik pemerintah Hindia Belanda dan Jepang. Sejak saat itu, tanggal 30 Oktober diperingati sebagai Hari Uang. Pencetakan dan pengedaran ORI ke seluruh wilayah Indonesia dilakukan dengan penuh perjuangan di tengah berbagai keterbatasan dan agresi Belanda dan sekutunya. Keinginan besar masyarakat Indonesia untuk berdaulat dari mata uang asing mendorong lahirnya Uang Republik Indonesia Daerah atau ORIDA di berbagai penjuru Nusantara. Melewati perjuangan panjang, pada tanggal 17 Agustus 1950, bersamaan dengan dibubarkannya Republik Indonesia Serikat, para pendiri bangsa mengukuhkan kembali Negara Kesatuan Republik Indonesia dan menetapkan rupiah sebagai mata uang resmi Negara Kesatuan Republik Indonesia. Tonggak sejarah Bank Indonesia sebagai bank sirkulasi sekaligus Bank Sentral Republik Indonesia dimulai pada tanggal 1 Juli 1953 melalui proses nasionalisasi The Yavash Bank. Untuk pertama kalinya, uang rupiah dikeluarkan oleh Bank Indonesia pada tahun 1953 berupa uang rupiah kertas seri tokoh dan kebudayaan. Di awal kemerdekaan, Bank Indonesia berperan strategis mengawal pembangunan negara dan pembentukan karakter bangsa di tengah ketidakstabilan ekonomi. Seiring perkembangan negara guna mewujudkan stabilitas moneter di seluruh wilayah Negara Kesatuan Republik Indonesia, Undang-Undang Nomor 13 Tahun 1968 tentang Bank Sentral diterbitkan dan Bank Indonesia menjadi satu-satunya lembaga yang berwenang mengeluarkan dan mengedarkan uang rupiah dalam berbagai pecahan. Dengan menampilkan guratan budaya, sosok pahlawan, serta kekayaan flora dan fauna, selembar rupiah mampu melukiskan indahnya kebinekaan Indonesia. Goresan yang termuat pada setiap lembar rupiah mewakili setiap masa perjalanan Indonesia serta perwujudan semangat persatuan dalam membentuk negara yang berdaulat dan bangsa yang mampu berdiri sendiri. Berbagai tantangan mampu dilalui, berbagai pencapaian telah diraih, berbagai asa akan digapai. Bersama rupiah yang hadir di seluruh negeri, kita bangun optimisme menuju Indonesia maju. Bersatu dalam rupiah, berdaulat di NKRI.
may all be seated. The Honorable Governor of Bank Indonesia, Dr. Peri Warjio, members of Bank Indonesia Supervisory Board, Professor Nuri Effendi, Deputy Governor of Bank Indonesia, Dodi Budi Waluyo, Executive Director of Bank Indonesia Institute, Dr. Yoga Avandi, distinguished speakers and moderators, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. Shalom, Om Swastiastu, Namo Buddhaya, and good morning to all of you. On behalf of the committee, with the warmest regards, we have the pleasure of welcoming you to the 16th Bulletin of Monetary Economics and Banking International Conference and Call for Papers 2022. Synergy of Economic Policies and Innovation in Driving Momentum for Sustainable Global Economic Recovery in the Era of Digital Transformation. Ladies and gentlemen, in this annual BMEB International Conference and Call for Papers is an important part of Bank Indonesia Institute initiatives to develop research ecosystem in Indonesia, which over years has attracted more and more quality papers from prominent domestic and international researchers. This year's conference is held in hybrid format, and we thank you for your great enthusiasm and eagerness. Now, to start off the event, we would like to invite you to see the BMEB Manifesto.
The Bulletin of Monetary Economics and Banking, or BMEB, is Bank Indonesia's international flagship journal on monetary economics, finance, and banking. BMEB was first published in 1998 by Bank Indonesia as an Indonesian language quarterly journal. From 2003 to 2017, BMEB has successfully indexed by Google Scholar, ISJD by the Indonesian Institute of Sciences, Crossref, and ASEAN Citation Index. In 2017, BMEB accepted for inclusion in the Science and Technology Index of the Ministry of Research, Technology and Higher Education of the Republic of Indonesia. In July 2019, the Scopus Content Selection and Advisory Board accepted BMEB for inclusion in Scopus. As of December 2019, BMEB has been indexed in the Australian Business Deans Council. The transformation of journal management was rolled out by the BMEB Board of Editors as part of BMEB Medium-Term Strategic Plan 2, enhancing the journal infrastructure through improvement of the journal website and its content, as well as the transparency of the editing process, equip the editorial process with anti-plagiarism software, digital object identifier, and Scopus subscription. As a response to improve a better journal management system, BMEB has migrated from Open Journal System to Digital Commons. This system is the best-in-class institutional repository and widely used by prestigious journal publishers. Strengthening strategic partnerships. With the Asia-Pacific Applied Economics Association in 2018, strengthened the journal editing framework and processes aimed to improve on the quality and country diversity of the submitted papers. In addition, a collaboration with top Indonesian universities is established to strengthen the review process and improve the quality of papers submitted by Indonesian authors from local universities. Improving international exposure and visibility through presents itself at the Financial Management Association Conference and American Economic Association Conference in the USA. Organizes a joint call for papers and co-editing with partner Scopus Index journals during the 13th, 14th, and 15th Annual BMEB International Conference and Call for Papers. Going forward, we will continue to develop BMEB as a reference journal on central bank policy, economics and finance in emerging market and developing economies.
Now may we call upon Head of Bank Indonesia Institute, Dr. Yoga Afandi, to deliver the committee report.
Excellency, Governor of Bank Indonesia, Dr. Peri Warjio, Honorable Members of Bank Indonesia Board of Governor, Mr. Dodi Budiwaluyo, Members of Editor Board of Bulletin of Monetary Economics and Banking, Plenary Speakers, Professor Markur Bunemeyer, Professor Chun Ping Chang, and Mrs. Benedicta Nolens. Distinguished guests from government institutions, partner institutions, academia and research institutions, Professor Pares Narayan, all conference participants joining offline and online from Indonesia and around the world. Distinguished guests, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. Peace be upon you. Good morning. On behalf of Bank Indonesia Institute, I would like to express my sincere gratitude and welcome you to the 16th Bulletin of Monetary Economics and Banking International Conference and Call for Papers 2022. First and foremost, let us express our gratitude and praise to Allah, the Almighty, for His blessings and permissions. This is the first year that we are holding a major annual event in a hybrid format, with some attendees physically present in the room and others joining online from all over the world. This year's theme is Synergy of Economic Policies and Innovations in Driving Momentum for Sustainable Global Economic Recovery in the Era of Digital Transformation. This theme is very timely given the current condition in which innovation, particularly technological development, has been a significant driver of economic growth over the last decade. In keeping with this theme, we will discuss central bank digital currency, or CBDC, and sustainable economic growth during the plenary sessions. We hope that this conference will be able to meet its goal of providing an effective forum for academics, researchers, and practitioners to advance knowledge and research on economic recovery in the midst of COVID-19 pandemics and the digital transformation era. The organizing committee received a precious guidance and assistance in preparing for this conference, particularly from Bank Indonesia Governor, Dr. Peri Warjio, who is also the Editor-in-Chief of BMEB, and other members of Bank Indonesia Board of Governors. Their guidance and support have significantly improved the ecosystem of economic research, not only at Bank Indonesia, but also throughout Indonesia. On behalf of Bank Indonesia Institute, I would like to thank all prominent scholars and dignitaries for their enthusiastic participation in this virtual conference. Thank you for your dedicating your valuable time. Distinguished guests and conference participants, the BMEB International Conference and Call for Papers 2022 have received strong support and encouraging response from researchers and academics all over the world. We received 231 papers from 30 countries, 164 papers, or 70%, written by international authors, and 30% by Indonesian or mixed authors. This demonstrates the BMEB's international feasibility. For rigor, We ensure it through double-blind peer review and clear criteria for paper acceptance. This criteria filtered 231 submitted papers into 56 papers to present at this year's conference. Hence, the acceptance rate of submitted papers is 24%. We also strive for impact by considering impactful studies in the conference and ensuring geographic diversity among our authors. The invited papers are chosen by outstanding reviewers in collaboration with the Asia Pacific Applied Economic Association and reputable Indonesian universities. These invited papers will be considered for publication in BMEB or one of its partner journals, namely Emerging Market, Finance and Trade, EMFT, Economic Analysis and Policy, and Studies in Economic and Finance. These journals are all Scopus Index. This thorough selection process makes this conference the best venue to discuss various topics in the synergy between monetary and fiscal policy in economic recovery, role of innovation, including innovation to digital transformation in economic growth and development, and the relationship between innovation and economic policies in maintaining stability, sustaining economic growth, and promoting equitable welfare. I would like to thank many parties who have helped us in our never-ending efforts to improve the research ecosystem at Bank Indonesia. I would like to highlight our collaboration with the Asia Pacific Applied Economic Association, which has been highly beneficial in significantly improving the quality of BMEB. The Bank Indonesia Institute also expanding and strengthening strategic collaboration with other domestic and international partners to strengthen the economic research and scientific writing in Indonesia. This expansion and strengthened strategic partnership with various institutions have also resulted in positive contributions to the advancement of Indonesia's economic research ecosystem. I want to highlight our collaboration first with Indonesian Economics Association, the ISE, the Indonesian most prestigious economics organization. This collaboration aims to promote a more vibrant research environment for Indonesian economists, including support for the ISE journal, the Journal of Indonesian Economy. Secondly, also with Indonesian universities and research institutions that has enabling us to establish ecosystem for economic research for Indonesian academics. Distinguished guests and conference participants, on that final note, I would like to conclude my committee report. On behalf of Bank Indonesia Institute, I would like to express my heartfelt gratitude and appreciation to distinguished speakers, all participants, partner institutions, and colleagues in the organizing and scientific committee for their outstanding efforts in delivering this event. This conference is the result of many parties' hard work, support, and dedication. I wish to thank all the committee members who together make the conference possible. The committee has been working throughout the year to propose sessions, review a record number of submissions, answer queries, arrange the schedule, and respond to the last-minute requests. Now, allow me to respectfully invite the Governor of Bank Indonesia, Dr. Peri Warjio, to deliver a keynote speech and officially open this conference. Thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.
Ladies and gentlemen, may we have the honor to invite Governor of Bank Indonesia and BMEB Editor-in-Chief, Dr. Peri Warjio, to deliver the keynote speech and officially open the conference.
My dear fellow Board of Governor of Bank Indonesia, Mr. Dodi Budiwaluyo, and other that joining also online. Pak Halim Alansah, my dear friend, all of the board, chief board of editor of Bulletin of Economic Banking, I see a lot of fellows from the banking and as well as from the institution. I have to greet you, and academia. Of course, I want to say thank you to our distinguished speaker, Professor Markus Bruneimeyer. Thank you, Mark. Ms. Benedict Nolan, as well as Prof. Chang Ching Chang, and all of the reviewer, as well as also our moderator and also editor of Bulletin of Monetary, Economic and Banking, Professor Pares Narayan. Once again, welcome. Welcome of one of most reputable journal, Bulletin of Economic, Monetary, Banking, and one of the best in Indonesia. And welcome to one of the reputable international conference, the 16th International Conference of Bulletin, Monetary and Economic and Banking. We're not only delivering the best journal, the best conference, but also the best topic. This is after the 3 years as we met physically in Bali, enjoying nice cushion in Bali conference, and among others, the biggest lobster back then. But I'm not talking about those lobster and the beautiful. Of course, they are beautiful. But the topic that we deliver in this conference. The topic that we deliver in this conference always forward-looking on the front line. Remember, back then in Bali in 2019, and always for me, my honor to deliver the keynote. Back then, I talked about diminishing globalization and rising digitalization. We know about diminishing globalization back then, but we have not known about rising digitalization, which is now reshaping the whole world, including the task of central banking. In 2020, I talked about the frontline topic of economic as well as central banking. The need to look into the new approach, the new framework of macroeconomic, including also monetary policy. Back then I was talking about the inflation targeting framework is not enough. Yes, necessary, but not sufficient. We need to talking about capital flows, exchange rate stability, and then after that, now I'm talking about integrated policy framework, as well as also the need of macroeconomic stability to be supported by macro-prudential policy. The need to link it between macro and financial linkage. And now BIS formulating the framework of macro-financial stability framework. The dual target of central bank, price stability and financial stability, through monetary policy and macro-prudential policy, which I, with Dr. Salukin, published the central bank policy mix. Last year, I'm talking about how we need to address the pandemic. We cannot only talking about monetary policy, macro-prudential policy, because the pandemic retain our knowledge of academic and policy making. The need of simultaneity of the policy in the government. Because the pandemic needs some fiscal policy, need to be coordinated with monetary policy, with macro-prudential policy. The need of national policy making. Not only monetary, macro-prudential, and the central bank policy make, but between central bank policy make, fiscal policy mix, and as well as how to address the new emergence of the problem of the COVID. And today, I'm topping the other dimension of the new frontier, which is growing over the past 3 years, rising digitalization. How rising digitalization not only reshaping the economic and financial and our economy, supporting economic recovery, reshaping the way our thinking, the way I do, the way people doing economic transaction, but also reshaping the central banking. This is front line topic. This is the topic that we are dealing today, but reshaping the future of our generation, of our economic development, of our macroeconomic policy, of our macro and monetary policy, of the central banking. This is not theory, ladies and gentlemen. This is the problem that I'm facing today, and I'm doing that. And thank goodness, back in 2019, I already started Bank Indonesia, the fast growing in the world acceleration of digitalization of our payment system. We digitalized the payment system, introducing QR Indonesian standard, introducing fast payment, introducing the national standard of open API, integrating our national economic and financial digitization, pushing further digital banking, not digital banking that offering digital, integrating those with the fintech and as well as e-commerce. We did that. But let me bring you the now and future of our economy and how those will reshape the now and future central banking. This is what we are doing in Bank Indonesia. So basically, I will talk about central bank digital currency, digital rupiah that we are in the process of issuing. Why and what CBDC and digital rupiah is all about. Why we have to do that? That's number one. Number two, what the requirement that we have to introduce the CBDC, the digital rupiah, so speak. 3 requirements I will cite later on. And 3, how those will reshape the future of central banking in the digital era. Let me start the first. Why we have to issue CBDC? Why we have to issue digital rupiah? Because currency is one of the pillar of sovereignty of the country. There is no country in the world without their own sovereignty of currency. Whether you're talking about US dollar, euro, Chinese yuan, as well as rupiah. There is no way that the currency being issued by private. Because currency, one of the pillar of the country, sovereignty of the country. Why the country, as well as mandated to the central bank, need to issue CBDC? This is the reason why Bank Indonesia in the process of issuing digital rupiah. Under our constitution, only Bank Indonesia being mandated to issue currency in our central bank law. So legally tender of digital rupiah. And thus sovereignty issuing digital rupiah for sovereignty as what we know about the currency. To be a medium of exchange, unit of account, store value. The three functions of currency money that we already study. The difference between digital currency and the currency in our pocket, whether paper money or card, just digital rupiah is just in the digital. We design national sovereignty of digital rupiah with all the security in the technology platform. We are also developing what we call it Khasanah digital rupiah. Digital rupiah form, not in the physical building, but in the platform technology. Just exactly what we do in paper money, in card money, this is in the form of digital. We are developing digital rupiah form, Khasanah digital rupiah. We are in the process of that, with all of the design, all of the security feature, that only digital rupiah to be as formal legal tender in this country. And we will use that as reference, medium of exchange, unit of account and store value, all of the digital asset. Whether being used in the digital banking, e-commerce, or even in the metaverse. Those, the digital rupiah. How we have to distribute it? In the world, there is two options, which is the central bank only focusing on the wholesale, selecting the big player to be systemic, and then those, the bank, the payment system company, being mandated to distribute on the retail, wholesale, retail. Other central bank opted both wholesale and retail. In Indonesia, we are opted to distribute the digital rupiah to the wholesaler. We are in the process of selecting the largest player in the bank, payment system company that we will select and being mandated to distribute our digital rupiah. The distribution platform will using DLT, blockchain, distributed ledger technique. And the bank will have two accounts, digital account and standard account. This is just, once we introduce it to the bank, just the bank can use their own DLT, distributed ledger technique. This is digital rupiah, one form of CBDC. Our constitution, our law mandated us to issue digital rupiah as sovereignty of the country, as a legal tender, the only legal tender. We are in the process of that, issuing digital rupiah, building digital rupiah, for building DLT platform, selecting the wholesaler, and of course, we will distribute that. The wholesaler will use that as medium exchange. In the future, ladies and gentlemen, for those millennials can have two accounts in the bank. Whether the standard account that you know or digital account in the bank, in the payment system company. We will do that. So you can do metaverse from that using digital rupiah. Ladies and gentlemen, and my children of millennials, welcome to the future now. Number two, what the requirement to distribute the digital rupiah, CBDC? One, and the most important, is the conceptual design of CBDC, the digital rupiah. Bank Indonesia is in the final process of this conceptual design. the design, the security, the digital rupiah, vault, and also selecting some the wholesaler. We are in the process of issuing the white paper, the consultative paper, the conceptual design of digital rupiah. Number two, that we have to prepare is the integration, the interconnection, the interoperability of the payment system infrastructure and money market. This is important. Once we select wholesaler, once we distribute digital rupiah, this infrastructure need to be integrated, interconnected, interoperability. That's why we are building BI-FAST. That's why we are reforming RTGS. Why we introduce ETP, an electronic trading platform in the money market. Why we are now developing central counterparty. And most of all, we are in the process of developing the coding for interconnection, integration, and interoperability of our payment system infrastructure and money market. Application programming interface. 3I. Integration, interconnection, interoperability. So, going to the future, not far from here, Bank Indonesia Fast Payment, RTGS, National Payment Gateway, Electronic Trading Platform Multi-Matching, Central Counterparty, BIS4, all of them are integrated, interconnected, interoperability. This is the requirement of the technology infrastructure. Why we have to do that? Because once we issue digital rupiah to the wholesaler will distribute among others those integration and distribute it to retail. This is the development between digital rupiah and paper money. In paper money, we distribute also to the retail, not only through the banking, to the financial sector, but also we distribute directly to the people. For digital rupiah, we only distribute to this wholesaler, the bank and digital payment system company, and then they will be mandated. As reference, medium of account, legal tender, store value of any digital economic and financial sector, the retailer. This is requirement number 2, the integration, interconnection, and interoperability of those payment system infrastructure and money market. And thank goodness, we already building those infrastructure since 2019. You are Indonesian standard for the retailer. Bank Indonesia Fast Payment not only for retailer, but for this developing the integration. We are already building ETP multi-matching. We are in the process of CCP. We are integrating those. Just like in Jakarta, there is a ring road. Those ring road are to be the requirement, second requirement. Requirement number 3, and my fellow from BIS can share with us. We are in the process of joining other central bank what the best digital platform technology that we need to do. Because in every country, including Indonesia, digital rupiah, what we want not only being used in Indonesia, but also can be used cross-border transaction. That's why BIS developing the project of Nexus. Why in the Asia building mBridge, the platform technology for digital CBDC that not only can be used in the country, but also can be cross-border. Once again, welcome of the future now. This second part, digital rupiah, why and what. Second, 3 requirement, conceptual design, integration of interoperability, connection of payment and money market infrastructure, and platform technology, which is also can be cross-border. And even beyond that, even in the midst of preparing those three, ASEAN 5 already leapfrogging under G20, which is connecting our QR fast payment of the 5. We already with Thailand and Malaysia, and soon with Singapore and the Philippines. Interconnection of the payment system, not only nationally, but the ASEAN 5. And using local currency, not other currency. We already leapfrogging on that, on the G20, because ASEAN 5 when leading as a good example of the world, not only developing national, but also cross-border cooperation, especially the ASEAN 5. Let me just going to the third part of my keynote, the future of central banking now. What we have to do, both at the digital policy making as well as digital policy process. Soon, every country in the world, including Indonesia, specifically, there is 3 segments in our economy. One segment is, of course, the SME and others, the smaller segment of the economy, which is Indonesia. This is playing a significant role. The second part is, of course, the manufacturing, industry, corporation, big corporation. But the third part is digital. Different from country and country, economic and financial digital is different. And other country focus on the corporate, the big. But in most emerging country and developing country, focus on the small segment. This is the future. And we are seeing already this. How digital financial inclusion, how digital economic inclusion. We are digitalizing SME. QR already being used more than 20.5 million. We already connected to the QR national. Soon this year, we are target 30 million. And within the next 2 or 3 years, we are aiming 65.5 million of SME digitalized. We are pushing our fellows of banking, Pak Yahya here, also Darmati, Mandiri, and others, digitalize. Go out there. Find new customer. So many in our retail market have been not touched by account. Touch them by digital. We are helping Pak Andin, Minister of Finance, to electronification of social program, any social program. We are also helping the government, local government of electronification, digitalization. We are digitalize the smaller segment of our economy through QR, through fast payment, through national standard of open API, through integration of e-commerce, fintech, and digital banking, and pushing startup, developing startup everywhere. This is outreaching the smallest segment, which consists 2/3 of our economy. Just imagine central bank living in this environment. 3 segments, smaller segment, corporate, and digital. Digital we use for the smaller, and also digital for the millennial. This is what we are. And just imagine the impact of central banking. How we have to think the digital money supply process. Because the central banking must start with money supply process. How we have to think the money supply process to digitalization. That's why back in 2019, the first vision of our digital payment system, blueprint is to digitalize our payment system to integrate it national economic and financial decision so that to still preserve the money supply process, monetary policy, macroprudential, as well as the payment system policy. That's why we developing the unicorn, the megatron, the integration, the ecosystem of digital banking, fintech, e-commerce. And we do that in our policy. So with those, we already thinking to the future. Because with those, we can preserve digital money supply process. One requirement that we are still in the process of digital ID. We are in the process, Pak Yaya and other fellows, to develop digital ID, to build our digital platform, data, warehousing, national. Of course, our focus will be on the payment system, central banking, and will be a part of national data. We're not developing national data, but we are developing data, payment, and some, of course, on the money market and others. So with that, we can count what is the digital-based money, Pak Iwan. Digital-based money. The bank have two accounts in the bank, Bank Indonesia, Central Bank. The standard account, digital account. What is the money multiplier? M1, M2, I don't know. M1D, M2D, we have to develop that. Money, base money, M1, M2, money multiplier, with those segments, 3 segments of our economy. That's the standard central banking. With that, with the payment, with the national data ID, Pak Halim, then actually we can analyze this. The difference in the past, we are using Excel econometric. Now we are using big data, data analytic, data scientists. This is the central banking in the digital area. We can develop forecast M2, M1, not through the econometric of whatever, error correction model, Bayesian estimation, but through data scientists and data analytic. We need to do that. We are doing that. So the new Bayesian continuous learning of forecasting, Pak Iwan, always new. So this is one. With that, then we can formulate monetary policy. I reckon the transmission will be fast growing because the transmission now M2, M0, M1, M3. Transmission policy rate of central bank, money market, deposit rate, lending rate. But now very instant through digital. Monetary policy will be more effective, as well as, of course, the macroprudential policy and the payment system. Of course, the risk of monetary stability, of financial stability is there, especially from the systemic risk of operational, which is basically cyber risk. Operational risk will be a new risk, much bigger risk of monetary stability and financial system stability. Those national central banking, money supply process, monetary policy, macroprudential policy, payment system policy, and of course financial system policy with Minister of Finance as well as Financial Supervisory Authority. How about cross-border exchange rate arrangement? how we have to do exchange rate arrangement, how to do capital flows, how to do cross-border supervision. This is cross-border. This is why we are starting ASEAN 5 payment connectivity with local currency. We are in the process of formulating, organizing a policy-making body which is agreeing among the 5 how the exchange rate arrangement through the digital as well as how connect to the market. This is the exchange rate arrangement. Much easier for those countries that have a PAC system. That's why Professor Chang can share with us why for those countries that have a PAC system, much easier, because one-to-one. The exchange rate arrangement just agreeing the PAC system. But for the flexible market-determined system, exchange rate arrangement must be formulated. Thus, the formulation among the central bank governors. That's why much faster between China, Hong Kong, and other with PAC system. In Middle East, UAE, and others with a PAC system. In Europe, nexus within Europe, because of PAC system. But among the 5, we must agree how to determine the exchange rate of rupiah and ringgit, rupiah and Singapore dollar, rupiah and baht, rupiah, how those connecting to the market determine. This is the exchange rate arrangement. Capital flows management. How to monitor the capital flows and how those need to have regulation and supervision. Capital flows management. And last but not least, of course, agreeing and regulation and supervision for those bank, those payment system companies that joining the cross-border. So this is, ladies and gentlemen, the central bank of the future now. With that, let me conclude. What is digital rupiah? Why? Second, 3 requirements: conceptual design, infrastructure, as well as choice of technology. 3, what the future of central banking now? With those 1 and 2, then we already now in the current time. Central bank of the future will need to develop digital money supply process, digital monetary policy making, macro-prudential policy making, as well as payment system. And let me tell you, Bank Indonesia already doing that. We are already not only starting our digital policy making, but also reform of digital policy making process, institution. We are already introducing a monthly board meeting through digitalization. We already digitalize our business process, policy making process. We are developing internally how the collaborative platform of our economies. How those being uploaded in the monetary policy financial committee. How those to be uploaded in the board of governor meeting, and how those the decision already. We already started our digital business process, re-engineering. Let me conclude. Welcome the future of central banking now. Bank Indonesia already started. Back in 2019, digital payment system blueprint. We already progressing. Now, we are in the final process of consolidation of digital rupiah. Now, we are in the process of interconnection, integration, interoperability of payment system and money market, choosing and joining others of platform today. And now, Bank Indonesia already starting to build our digital money process, digital policy making, as well as digital business process re-engineering. Welcome to the future, guys, now, and we soon will get there. With that, let me officiate the 16th Bulletin of Monetary and Bulletin of Economic and Monetary Banking and International Conference and Call Paper 2020. May God Almighty, Allah Subhanahu wa Ta'ala, enlighten us, bring the knowledge of the future in this conference to receive the new era of digitalization. I thank you.
Thank you. Thank you, Governor Periwarjo, and please kindly, we would like to invite. Okay. Dr. Periwarjo, we would like to invite you to come up to the stage to join virtual group photo. And we also like to invite Deputy Governor Dodi Budiwaluyo, Dr. Yoga Fandi, Dr. Solikin M. Juro, Dr. Iskandar Simorangkir, Profesor Nuri Effendi, Dr. Halim Alamsyah, Profesor Iwan Jaya Aziz, Profesor Jonathan Batten, Professor Chumpin Chang, and Professor Paras Narayan to come up to the stage as we kindly ask you to join the group photo. We also like to invite Bapak Yahya to come up to the stage and join the group photo. Group photos will be taken 2 times. Please be ready on our count. Ready in 3, 2, 1. Once more in 3, 2, 1. Thank you. Gentlemen, you may please be seated. Ladies and gentlemen, please give a round of applause for Dr. Periwarjo. Once again, we would like to thank the Governor of Bank Indonesia for delivering the keynote address and opening the conference. Ladies and gentlemen, we will start our plenary session. As we're about to begin, please be seated. In this plenary session, we will have 3 prominent speakers with exciting topics. The objective of this year's conference itself are to gain insights from leading scholars on macroeconomics, digital economy, and green economy, build networks between researchers and academics for the purpose of formulating high-quality research that has strong policy implications, and facilitate both researchers and academics. Distinguished ladies and gentlemen, we shall begin our main agenda today, plenary session on CBDC and sustainable economic growth. To lead this discussion is Professor Paras Narayan, and before we invite Professor Paras Narayan, we would like to introduce you to him. Professor Paras Kumar Narayan is professor and consultant at the Monash Business School, Monash University. He is also the editor-in-chief of Emerging Market Finance and Trade, managing editor of Bulletin of Monetary Economics and Banking, Bank Indonesia, and a former co-editor-in-chief of Economic Modeling. His research interests are in applied econometrics and financial markets. Professor Narayan is amongst the top 90 researchers globally from business school, whose work is most cited in 2017, 2018, 2019, 2022, and 2021. He holds the distinguished title of a high-side researcher, part of a group of only 2 such researchers in Australia. The Australian newspaper has named him among the top 40 stars of research across all academic disciplines in Australia and research leader of the international business field, Google Scholar has named him among the top 40 stars of research across all academic disciplines in Australia and research leader of the international business field. Without any further ado, ladies and gentlemen, please welcome Professor Paris Narayan.
Thank you very much for your very kind introduction and for your invitation to have me as your moderator for this plenary session. This is the 5th year that I will be moderating this very important plenary session. And there's 2 things that I have learned over the last 4 years. This is the 5th year, as I said. The first lesson to be learned is the governor's speech that sets the agenda for not only the plenary session, but also for the theme of the conference. And the messages that come from the governor's speech are very, very important for future research, not only for central bankers in the region and globally, but also for academic researchers, and many of you are present here, both physically as well as virtually. And as a result of that influence of the governor's speech, the BMEB has started to publish the governor's keynote speech in the Bulletin. So you would see that in the last 2 years, the special issue of the BMEB contains the governor's speech in a more summarized, condensed form. And we are hoping that a lot of the research can be stimulated out of that, because what the governor has outlined again today, as he has done very successfully in the past, is to identify the key issues and key challenges for central banks. And I think we want to promote that research and start or kickstart research in those areas. The second lesson I learned over the years is to actually manage time, or time management. Particularly when we have plenary speakers, as you can see the quality of the speakers in our lineup today, they are very, very knowledgeable. And in the last 4 years with our conference, we have found the quality of plenary session has been very, very high, stimulating a lot of discussions, of course, leading to new research ideas. So managing time is very, very important part of a moderator, because when people are knowledgeable, they obviously know a lot of things and they want to share a lot of things, which is nice. Unfortunately, with our session, time is of essence, so we have to restrict the time and also to give the audience a chance to ask some questions. So in light of that, today's session, we have, as you know, we have 3 speakers. The theme is Synergy of Economic Policies and Innovation in Driving Momentum for Sustainable Global Economic Recovery in the Era of Digital Transformation. We have 3 speakers. what we will do is we'll give each of the speakers 35 minutes to talk, share the main ideas that they have on this particular theme, and at the end of their talk, we will have about 30 minutes for Q&A. We will take questions from the audience here, as well as we'll take questions from the audience joining us on Zoom. I want to then start by introducing our first speaker. And the first speaker is Ms. Benedict Nolens, and she joins us from Bank of International Settlements. Again, I have to say that it's a pleasure, it's a real pleasure that we have got three very high quality speakers who have taken our invitation to join us at the 16th BMEB conference. So thank you for your time. I know that there are different time zones that you are joining us from, and really appreciate that. Obviously, from our point of view, it would have been wonderful to see all of you face to face here, but we realize the difficulties and the challenges of traveling at this time. Now, our first speaker, Ms. Benedict Nolens, is head of BIS Innovation Hub Center, Hong Kong, the co-chair of Women in Finance Asia, and a board member of the FinTech Association of Hong Kong. From 2018 to 2019, she was the Vice President of International Government Relations at Circle. From 2012 to 2018, she was the head of Risk and Strategy of the Hong Kong Securities and Futures Commission. And in that capacity, she was also the FinTech lead for the International Organization of Securities Commission. From 2007 to 2012, she was a managing director at Credit Suisse. From 1997 to 2007, she was an associate and executive director at Goldman Sachs. Mrs. Nolens holds LLM and MBA from the University of Chicago and the University of Leuven, and is admitted to the New York Bar since 1999. In 2016, she was a recipient of the China Daily Asian Women Leadership Awards for her efforts related to entrepreneurship, innovation, and charity. Under her leadership, BISIH Hong Kong's Excellence Work Program for 2022 to 23 includes CBDC, DEFI, RegTech, and Green Finance initiatives. The mission is to develop innovative solutions that benefit the current financial system, including a prototype platform for CBDC that facilitates international payments. I have much pleasure in inviting Ms. Nolens to give the first talk this morning. Thank you.
Thank you very much for the introduction. So I cannot see the slides myself, but have the slides been brought up? Can everybody hear me or not?
Yes, we can hear you.
Oh, okay, good.
Thank you.
And have the slides been shown yet or not yet?
Not yet.
If not, no worries. I will just start speaking. So first of all, thank you for this kind invitation. It is definitely my honor to be here and to speak to you. As explained, I am the head of the BIS Innovation Hub Hong Kong Center. So the BIS Innovation Hub is what we call the newest member to the BIS family. We were created as a new group around 2 years ago with the exact purpose of investigating which areas of innovation central banks should focus on to continue delivering on their mandate. And as the governor kindly introduced, there are a lot of areas, and one of these areas is CBDC. For the purpose of this talk, I was requested to focus on the topic of CBDC and economic growth, as well as sustainability and inclusion. And I will therefore come from that perspective. As you also kindly introduced, my center is working on several CBDC projects. One of them is the Enbridge project, which the governor mentioned, and which is a wholesale CBDC project. It is intended to help facilitate international payments in atomic fashion, meaning in instant fashion. So it is intended to improve on the current correspondent bank process in terms of both time efficiency and cost efficiency. I will turn to that project at the end of this talk because it is a wholesale CBDC topic. And before that, I will be focusing on retail CBDC, which the governor also introduced, and which typically is the first priority of different countries. Okay, good. So now I can see the slides are there. So next slide. Yes, so the BIS Innovation Hub is operating from 7 locations at this moment. So we are operating from Hong Kong, Singapore, Stockholm, the Eurozone, London, and also Toronto. And we have also a center in New York. So as mentioned, we've just been started 2 years ago. The BIS itself only has presence in 3 locations, Switzerland, Hong Kong, and Mexico. And accordingly, this map shows you the commitment of the BIS and the international central banking community to the topic of innovation. So next slide. So as mentioned, for this first part of the session, I will focus on the topic of retail CBDC and what the reasons for retail CBDC are from the perspective of inclusion. So according to the World Bank Financial Inclusion Index, 1.2 billion adults gained access to a transaction account between 2011 and 2017. And most of this was really driven by progress in digital technologies. And that progress in turn was often supported by governments and also by central bank policies. In several markets, specifically across Asia and Africa, mobile money combined with, for example, QR codes have significantly improved the access to and the use of these digital payment methods. And I think you are no stranger to this in Indonesia, because Indonesia is quite advanced at all of this, probably due to the size of the country. It is quite often that bigger countries with bigger populations actually see a faster digital evolution, because for digital payment tools to take off, they benefit from large population sizes. And as you know, they often bring the costs down, so they need these large population sizes. And it is no surprise, therefore, that this evolution is faster in countries like Indonesia, China, and also India. There's also evidence that the digitization has contributed to poverty reduction and to greater resilience of households. And as you know from India's example, they have introduced a digital identity stack that has further improved the speed of adoption of these digital solutions. So next slide. Based on its research, the BIS and the information I'm presenting is coming from a recently issued BIS paper, which I will show to you at the end of this slide pack. There are reasons, though, for continued lack of inclusion. So 1.7 billion people remain outside the formal financial system. And they remain outside the system for the reasons that are mentioned here. And I will go through each of those individually in the next few slides. So next slide. This research that I'm presenting here was prepared during the course of 2021, and it was prepared based on interviews by the BIS and the World Bank with a series of central banks. I see that the Bank of Indonesia was not part of the survey, but in general, these are each banks that care as much as you do about this topic. Next slide. So one of the reasons, aside from those cited by the governor for CBDC, that came up a lot from these interviews is CBDC as a catalyst for change. So to a certain extent, as you know, the private sector brings forward a ton of evolution. But there are areas where it doesn't. And in these areas, for central action or for public sector action to occur can actually stimulate further change. And probably the two types of CBDC that we will be talking about, retail CBDC as well as wholesale CBDC, fall within that topic of catalyst for change. For example, for wholesale CBDC, as mentioned, the transfers remain costly and they remain quite slow in terms of being able to transfer your money on a cross-border basis, which means that there are either inefficiencies in the process that cannot be overcome by the private sector, or on the other hand, it could be that the private sector is just not having the right catalysts to innovate and improve this. And CBDC can offer such a catalyst. Similarly, so for retail CBDC, while a lot of progress has been made by the payment apps, as you know, are incredibly profitable. So this also indicates that there is more room for further reducing the cost of these transfers. And the very feature of a retail CBDC is that it would need to be costless to the user, much like cash is costless to the user. Next slide. So I will walk through these different factors that have been raised as the reasons for looking into CBDC in the context specifically of financial inclusion. And one of the most prominent factor is to do with geographic spread of certain countries, and specifically this, not only the size, but as you have exactly in Indonesia, is a very large number of islands. And these islands, they do not benefit of the same, for example, ATM network as I might be used to, for example, in Hong Kong. This was cited extensively, as you know, in the Bahamas as a reason why they've introduced CBDC, is because people do not have access to efficient access to money. And the belief is that the introduction of a CBDC will make it more efficient for people to have access to the national currency. It should, however, be noted that CBDC is largely reliant on a well-functioning, in general, I would say these days, Wi-Fi coverage, so mobile data access, or fixed broadband. And sometimes in very small islands, as you know, this remains a challenge, as well as, for example, even the ability to have access to reliable electricity. So for these reasons, while these geographic barriers are important motivators, it is unlikely that in the very near term, for example, cash money, paper money will completely disappear. It is in these societies that it is very common that people will actually prefer and continue to prefer paper money. Next slide. So the other reasons why you see a low financial inclusion, and this links to CBDC, but is not the same topic as CBDC, is the identification system. And the governor has already touched on this issue. In many jurisdictions, basic public goods like identification are absent or not widespread. And some individuals lack an ID document or credentials to meet the basic know your customer requirements to open a transaction account. Therefore, in many research, the most foundational piece really to a very well functioning digital system, including a digital payment system, is to solve the identity issue. And across the world, there are efforts in this space for countries that do not have such a system, or where the system is not sufficiently digitized. I would note that even in Hong Kong, to this effect, we have an effort underway called I Am Smart, where increasingly more and more of our tasks or our interactions with the government are being placed onto an app. So one of the aspects is our identity. The other aspect is our COVID vaccine pass, which has been a very prevalent push towards adoption of digital identity. But increasingly now also on the app, I can see other applications like, for example, my tax filings. So eventually this app will be our major point of interaction with the government. And this app, in turn, is the app that can be connected to by financial institutions who want to automatically pull my identity subject to my approval so that I can open an account. As part of my center's activities, we also, aside from the CBDC project, looked at a green bond tokenization, a government green bond tokenization project. And we, on a prototype level, we integrated it with the I Am Smart system so that in this concept where you could subscribe to retail bonds, green bonds in this case, that you could very easily onboard and buy these bonds through the use of this identity system. So in sum, an identity system connects to many more aspects than just simply banking. It can also connect to, as said, government bond subscription. Sorry, next slide. This was the slide of the Hong Kong system, so you can turn to the next slide. Good. So the other issues that have been commonly cited as issues for low adoption of digital is in the context of economic and market structure issues. I touched upon these a little bit before, but there could be limited competition in the financial sector, leading to high markups by banks and other financial institutions, visible in a high cost of executing payments and a large wedge between lending and deposit rates for households and businesses. As I mentioned before, this is one of the reasons how CBDC can be used as a catalyst for change. So next slide. This slide shows to you some of the numbers that the BIS has been compiling together with World Bank around mobile phone usage and ID credentials. So you can see on it that the use of digital payments rises with greater mobile ownership, and also that there is a greater access to transaction accounts. So these figures are quite well established. Now, on the other hand, it also shows that national identity cards are near universal in many countries, but not in all countries. And that is the topic we just touched upon. Next slide. So other than those reasons given in the survey, many central banks also emphasized the gaps in inclusion by age, and by gender or region. Obviously, individuals with lower incomes universally have lower access to transaction accounts. Women are also less likely to have used the internet to buy something in their past. And some central banks discuss the challenges for those with difficulties like visual and hearing impairments and the lack of formal education. In the case of China, for example, the E1 has app features that are disability friendly. So, for example, for deaf or blind. Next slide. So this slide shows the account access and digital payments use can vary by income and by gender, as shown and as just highlighted on the prior slide. So we can move again to the next slide. So then there are some other subsidiary reasons, and they include the lack of education and then also the lack of trust. So in several cases, central banks emphasized a low level of financial and digital literacy, for instances, to understand why people in some still stick to cash as opposed to other means. So several refer to it as a cash mindset among households who see cash as easy to use and helpful for budgeting and controlling spending. And then some central banks explicitly referred to the low trust in existing financial services and institutions, which is quite important and to a certain extent sad that we still have that. But obviously, due to the breadth of the survey, that factor would come forward. So factors that people would have cited is concerns around bank failures, fraud, hidden fees, and discriminatory treatment. Next slide. So this slide shows what was said before, that the share of adults with a transaction account is rising across the world, and that digital skills, as said, are improving. Now, on the last box there, you can see the shadow economy remains nevertheless still quite large. And while that is not often cited in the CBDC context, of course, digitization could bring the shadow economy into the more formal economy. Next slide. So this slide sets out the different tools that the public sector has in order to facilitate financial inclusion. I guess I won't spend too much time on this slide, so we can turn to the next. So the one key distinction that is important for people to always keep in mind, that the CBDC is intended to be a liability on the central bank. And as such, it is quite different from for example, a PSP account, where the liability is the one of the PSP to pay you back and not the liability of the central bank. So in today's payment system, a payment must work its way through the balance sheet of intermediaries. But in a CBDC, by contrast, only the information of who owns which claim is on the central bank is being exchanged. The absence, therefore, of liquidity and solvency issues for the intermediaries and the associated need for prudential regulation for the CBDC issuer, which is the central bank, implies that new types of intermediaries could be licensed, thereby exerting competitive pressure on the national payment system. So in sum, the thought is CBDC can be distributed through possibly more than the banks. Next slide. As the governor also had introduced, CBDCs are typically, though, going through a tiered system, which is a system whereby we are still going through intermediaries, nevertheless, for distributing the CBDC. It just doesn't require transitioning to their balance sheets, and thereby it can reduce the cost. So next slide. So now I will quickly introduce to you a project that we are working on, which is a CBDC project, and it's called ORM. ORM stands for the Latin word for gold, and I would say it's still under construction, which is why we showed it a bit as a construction site. So this system is, as mentioned, also a two-tier system, very similar to what you are considering in Indonesia. So on the top sits an interbank system that is built on DLT. And then below it sits a retail e-wallet system for the distribution of the CBDC. They're in this system. It's a little bit unique in that we have a CBDC token and a stablecoin, and the difference being that the CBDC token is directly issued and distributed by the central bank, whereas the stablecoin is issued by the bank. Now, the reason we built in the stablecoin is to see whether that would lead to differences, for example, in in bank adoption or in programmability of the payments. And we will still study this area further in the coming year. Next slide. So the interesting aspect so first of all, this system, as mentioned, is a tiered CBDC system going through the distributors. The distributors in turn connect to the RTGS. So the interbank system is connected to the RTGS system in this prototype. Next slide. From the perspective of the user, however, as you can see on this slide, it is very similar to any payment app that you would be using today. So for example, it also makes use of QR codes. It is a simple app that you download. It is an app on which you just literally push a couple of buttons to produce the CBDC and to distribute it to whoever you want to make the CBDC payment to. So it's important to keep in mind that while the topic on an economic level and a research level is very complex, to get to CBDC adoption, it must be as simple to use as a normal payment app. Otherwise, it is hard to compete with the payment apps, as their functionality, as you know, is very good. Next slide. So the aspects of this ORM system is it focused particularly on safety, and it also focused on privacy. So the safety aspect is that when you use a DLT, there are risks of overissuance, double issuance, and double redemption. So in sum, there is a risk that the same asset is used 2 times, which would be obviously an issue. And so within this system, a lot of care was and a lot of attention was paid towards ensuring that the validation processes ensure that there isn't such ability to do these 3 actions of overissuance, double issuance, and double redemption. Furthermore, the system has focused on privacy in that the assets via the CBDC is going from wallet to wallet on an anonymous basis, meaning the accounts, much like in a cryptographic system, only show an anonymized account, and they do not show the identity. Now, because this is, however, a tiered system, as mentioned, the identity remains known by the intermediary. So the intermediary who has opened the account for the customer so that the customer can have that app and start transferring assets from their saving account into CBDC for the payment to, for example, shops or other individuals, the bank would know the identity, or the PSP would know the identity, but the central bank does not know the identity. This aspect is, again, different in this prototype from maybe some of the existing CBDC systems. We believed that this was important because there is an increasing concern amongst people that these systems could be used to ultimately interfere with their privacy. Next slide. So the ORM code has been built for the BIS. We've built it together with the Science Center of Hong Kong, which is very much an engineering shop, you could say. And this code is available for study by member central banks of the BIS. So any central bank who's interested in learning more about this code can get in touch with me, and we can make the code available to you. I would note that other than this project, we're also having two more retail CBDC projects, one around offline payment. As mentioned before, one of the concerns with CBDC and anything digital is that if you don't have access to the right Wi-Fi system or broadband network, that you may not be able to effect your transfer and your payment, which is an issue. Therefore, CBDC will have to build in offline capabilities. The E1 in China already has built in offline capabilities, and the BIS will be studying further how it can implement these offline abilities. We also have another project going on between Hong Kong and the Bank of Israel, which has a specific focus on cybersecurity and CBDC. Okay, next slide. And I'm nearly done, so I will be on time for the moderator. Okay, so as mentioned, I will turn for a little bit now to wholesale CBDC. So as the governor said, you can implement a retail CBDC within your country, but you still want your currency to be able to circulate outside your country, subject to your capital controls, and specifically for the purpose of trade. As was also mentioned a bit in passing, is that the network of correspondent banks has been paring back their cross-border banking relationships in the past decade. And they have been doing that due to de-risking. So in de-risking, what it means in practice is that the banks have been exposed to very significant regulatory fines, specifically from the US Department of Justice. These fines add up to over 30 billion for AML violations, as well as CTF violations and sanctions violations. So in total, the size of these fines has led the banks to be very conservative as to the countries that they want to do payments for. So the correspondent banking network has been paring down. And when things pare down, competition goes down, and when competition goes down, costs go up and inefficiency also goes up. You can see these numbers on the next slide. So then the next slide shows the decrease in correspondent relationships. And this is based on CPMI research, was published, I think, around 2 years ago. So. Next slide. So as also mentioned by the governor, we have started a project called Enbridge, which is a CBDC network, and in particular, a multiple CBDC network. The idea is that we connect central banks onto a network where they can issue and redeem their CBDC to facilitate instant payment. The Bank of Indonesia is an observer to this project, and this project currently is being led by 4 central banks, including the HKMA, the People's Bank of China, the CB and the Bank of Thailand. We're already at the 3rd prototype by now. So the first prototype was International Lion Rock, which was between Bank of Thailand and Hong Kong. The second prototype was last year, which you see explained in this report, and it was built on Hyperledger Besu. The 3rd prototype is being built on technology that will be proprietary to the central banks, and a set that also, much like Oren, will be made available to central bank members of the BIS. The idea here is, as said, maybe next slide, is to create a bridge. That's why it's called M-Bridge. It's called M for multiple CBDC. Currently, that's 4 CBDCs, but it can be, the network is being built for a large number of country participation. Currently, the network is undergoing already pilot processes. So we're currently connecting pilots with banks in the 4 locations. So there's more than 20 participants in the pilots. And the pilots involve real transactions. So they involve real payment, where, for example, me as a SME want to make a payment to China. These payments are currently being processed through the platform to see if the platform is properly functioning. Next slide. So to put it simply, and as we said in this report, we believe that if successful, an efficient, low-cost, compliant, and scalable multi-currency, multi-jurisdiction arrangement can provide a network of direct central bank collaboration, thereby greatly increasing the potential for international trade flows and cross-border business at large. Since we have a lot of economists, I think, in this conference, I would note that I encourage further study on the economics and to try and quantify how networks like the one I've described could multiply or increase trading activity. So last slide. So as mentioned, as said, I'm from the BIS Innovation Hub. We have a website on which you can see all our projects. They're listed by projects and by teams, so you can see that here. And most of the research I shared today in terms of financial inclusion at CBDC comes from the FSI Insights paper, paper number 41, issued back in April. So with that, I'll hand it right back to the moderator. Thank you very much.
Thank you, Mrs. Nollens, for your wonderful presentation and sharing your expertise and knowledge on the subject. Let's move on to the second speaker, which is Professor Marcus Brunemeyer, who is the Edwards Stanford Professor at Princeton University. He is a faculty member of the Department of Economics and director of Princeton's Bendium Center for Finance. He is also a research associate at NBER, CEPR, and CES-IFO. He is a member of several advisory groups, including the IMF, the Federal Reserve of New York, the European Systemic Research Board, the Bundesbank, and the US Congressional Budget Office. He was awarded his PhD by the London School of Economics. His research focuses on international financial markets and the macroeconomy, with special emphasis on bubbles, liquidity, financial and monetary price stability. He is also a Sloan Research Fellow of the Econometric Society, and the recipient of the Banneker Prize granted for outstanding contributions in the fields of macroeconomics and finance. He received a Guggenheim Fellowship for studying the impact of financial frictions on the macroeconomy. He has been awarded several Best Paper Prizes and sits on several editorial boards. His current works and research have been expanded to digital finance and theory of money, especially with respect to CBDCs, on which he has co-authored a report for the European Parliament earlier this year. With those words of introduction, I have the pleasure of inviting Professor Marcus to give the second talk of the morning. Thank you.
Thanks a lot, Paresh, and thanks a lot to everybody, and especially for Governor Periwaricho for inviting me and to present here my thoughts on CBDC. So I would like to talk about digital money more generally, and then zoom in on CBDC, and also perhaps give some in the theme of this conference, the interaction between digital money and sustainable growth, or whether there's some threat or some help to make growth more sustainable and more resilient in this sense. So if we move to the first slide, next. So the first question one comes to ask, isn't money already digital? Isn't your bank account and the debit card, the credit card, and PayPal, whatever you have, WeChat Pay or Alipay, isn't it all digital already? And indeed, it is the case that most of our money, including the reserves from the central bank, they are already digital. The only thing which is not really digital is cash, the physical cash. And that's the money which, is the money from the central bank, from the government branch towards the citizens. So that this government has a direct connection between itself and the citizens. And that's essentially becoming less and less more prominent. And that's why we are thinking a lot to introduce some CBDC. And in the next slide, I will then show that, what is special about digital money. One thing which is very special, and that's very important to recognize, that it is part of a digital ledger. If you have cash, there's no ledger. Nobody's writing down exactly who has how much money in cash. We don't know yet. That's all hidden. And there's a lot of privacy automatically baked in. But if you have digital money, then you always have a ledger. So if you look at cash, so here I've listed various forms of money, like cash or the reserves from the central bank, or some checking account from the bank account, or some crypto assets. And you can also have certain platforms issuing tokens. That's you can think of Alipay's token, you can think of a particular token. And what's special about cash is the only one which has no ledger associated. And all the others, the other digital money forms of money, they have essentially some ledger where things are written down in a big database. And the question is then, who is controlling this ledger? Is it a centralized control or not? And in most of them, it's a single centralized control. It's a central bank or it's a private bank, except for crypto assets where it's a distributed ledger. There's no centralized control. And then there's always the question, how is it observable? Can you see it? Is it a hidden ledger or not? That's very different. And are the payments anonymous or not? This depends on all the different forms of monies we have, digital monies we have. But what's very important is that most of this money, as I mentioned before, except for cash and reserves, they're actually created by the private sector. And if you go to the next slide, you can see that cash is very different from digital money. There's no explicit ledger, and digital money has this programmable ledger. And the big advantage is essentially that you can program this ledger and you can combine it with other databases. So you can make some automatic execution, combining it with smart contracts, for example, which you can't do with cash. And it can also not do with a lot of existing digital monies, because the ledger is not so easily connectable or interoperable with other forms of ledgers where certain things are recorded. And I will come back to this. So the question is, who has the writing and reading privileges on these ledgers? Is it centralized or is it decentralized? What's the consensus algorithm, and so forth? So in the next slide, I will show the following. So if you can move to the next slide. That most of our money essentially, and that's also what Benedict said, is that most of the money is a part of our two-tier system. And it's a public-private partnership, a PPP, where the government is issuing some outside money, and is controlling the unit of account. It's doing some settlement. And then the banks, their issue essentially inside money. And, that's from the bank. And most of the money we are holding in as private citizens is actually from private banks. So there is multiple issuers of money, but there's only one money. And one big task of the central bank is to make sure that all the money is uniform. There's a single form of money, even though many people or many institutions issue it. And the uniformity of money is very critical to have one unit of account. And there's a lot of debate going out. Should we, have, more government involvement in issuing money, or should we have more private involvement in issuing money? And just to show you the polar cases, and there's a big debate out there. The one case is what we call the sovereign money school, and that's actually come from Switzerland. There was actually a vote put to the people whether all the money creation should be done by the government. There shouldn't be any money creation by private banks. Right now, there's a lot of money creation by private banks. Base money is created by the central bank, reserves and cash, but a lot of this other money, part of M1 and so forth, is created by the private banks. So one school of thought says, we don't want that. We want essentially all money to be created by the official sector, by the central bank. And then there's the other extreme, that's a libertarian movement. That's a crypto movement, and the Hayekian school is that essentially all the money should actually be created by the private sector. The government should be pushed out and should not be so much involved in that. And then there's the question, actually, do we need something like a CBDC, central bank digital currency, which is created by the official sector or by the central bank, or can we do it with a network of bank accounts and stable coins? Can we do that? And how to make sure that the unit of account stays with the government, and to make sure that there's a unit of account for all forms of different issuers? And can we ensure this through regulation, deposit insurance, and lender of last resort? Of course, if you do a CBDC, and that's what Benedicte pointed out, is that the CBDC, there's no default risk, there's no solvency problem. If you have a private issuer like a checking account, there might be a bank run, the bank might go down, or the stablecoin issuer might go down. And can, through regulation or deposit insurance and lender of last resort policies, can you make this private money as safe as you would have with central bank money? And can you, when you make it as safe as that, can you make sure that the unit stays the same, the denomination stays the same? And so far, the way we achieve that is that you have the right to convert this private money into public money. So you can go to your ATM and convert this bank account money into cash, which is money from the central bank. And that's essentially not feasible anymore when cash goes away, or if cash becomes less relevant and is less useful. And this way, the central banks have to think about alternative digital forms of cash. And if you have that, if you introduce CBDC, then actually maintain the current system, you just move it to the digital arena. And if you were not to introduce it and just work with this regulation, deposit insurance, and lender of last resort, then it actually would be the case. It would be a much more radical break to do that. So let's move to the next slide. Now, what are the different perspectives you can take, and what are the trends which are coming to us and which make it important to put it in a bigger light, why we need CBDC and why we want to do that? So the first one is that we have social networks for the citizens. So just think of Facebook or Meta or many other, WeChat and other social networks. They can offer their own separate token. And Facebook tried to offer, of course, already Diem or Libra first, and then Diem, and now they're scrapped it. So that was actually a wake-up call for many central banks to start thinking about CBDC. But I think what's often ignored is that what will happen in the future, we will have a lot of supply chains which are actually will be operating on blockchain environments. So there will be databases or blockchains where the supply chain is operating. That's the so-called Industry 4.0. So you will have, for each industry, you will have huge supply chains, and whenever a little widget moves from one factory to another factory, that will be recorded in the supply chain, or even a little screw will move there. So think of an industry like the automotive industry, which involves a lot of suppliers, a lot of SMEs, as the governor pointed out, and they will supply essentially some of the industry. And whenever a little screw goes from one factory to another factory, that will be recorded in some blockchain and in form of tokens. But these blockchains, they will also have a payment rail. So the payment rail was that whenever a little widget goes from one factory to another factory, there will be a payment happening automatically. So right now, what happens is, the supplier is delivering something over the month, and at the end of the month, he sends you a bill, and then there will be a payment on this. But in the future, there will be every millisecond when there's a little supply happening, there will be immediately the payment will happen at the same time. So there will be a lot of this programmable payments. So there's a ledger or a blockchain ledger, for example, from the supply chain, the supply platform, and that can be connected with the payment ledger automatically. That's the advantage of digital money. You can connect different forms of ledger, and then you can execute these payments automatically through smart contracts tokens. So this automatic execution of these payments will lead to a huge explosion of payments. And an automatic execution makes it, of course, way faster in real time and so forth. Now these are two trends, essentially, social networks and the supply chains. On top of it, there will be a lot of information on these platforms and we have now new tools to exploit this information to artificial intelligence, deep learning, big data. So all this big data we have, which we have, with a lot of payment data traditionally, but we didn't exploit this. But these platforms can really exploit the data. Now, what is often overlooked, and if you ask, people at Alipay and financial and so forth, what they think is what the advantage is, essentially, they say we can actually extend credit, we can extend loans at extremely low default probability to SMEs because we observe all the payments, the payment inflows and the payment outflows, and they can analyze these payments and figure out, who is more creditworthy, who is less creditworthy. But what's also important is one reason why the default probabilities on these SME loans from these platforms is so low is that it is the case that they can exclude certain SMEs from their platform. So if, for example, if you default on your loan, they can say, oh, we exclude you from our platform. And that's a huge punishment. So the exclusion power these platforms have is actually tremendous in a sense, and that brings the default probabilities down dramatically. But of course, it also gives these big platforms, these big companies, a huge power over many, many small SMEs. And these platforms, in a sense, if they issue their own tokens, they are only almost like digital currency areas. They're areas of currencies on their own. So they could also issue their currencies. So Facebook issuing Libra would be a digital currency area, but it could also be some supply chain issue a certain token. And then the question is, this token issued by the supply chain, will it be denominated in the local currency? Will it be denominated in dollars? Or will it be denominated in, some new currency? It's not connected, pegged at all to a particular traditional currency. So if we move to the next slide, so just to summarize, what's important is we have this huge trends, so the social network platforms, we have the industry platforms, and then we have this technology to exploit the data from these platforms. And the exclusion power being kicked off the platform, that gives actually these platforms a lot of power to grant loans with a very low default probability than what others couldn't do. So let's move to the next slide. And that's essentially what the next slide shows you, and I will mention it only briefly. If you look at banking, and traditionally we think about banking, you extend loans, so there's credit extension, and you create money on the liability side of the banks. And we say there's some synergies between that. On the one hand, you can extend credit and also create money. That's some synergy in banking. But now if you have these big tech companies, they also create synergies from this platform ability to match buyers and sellers. So they create this platform, and there are synergies also from this matching activity. And the fact that they can kick you off this platform gives them actually advantages compared to banking, also to extend credit and also to create money. So let's move to the next slide. Now, that's what, to some extent, what I mentioned already is that the DeFi, decentralized finance, uses the smart contracts on a blockchain ledger to create all of these financial instruments. And the key feature is the decentralized control that is peer-to-peer network consensus algorithm. So there's not one person controlling the ledger. It's decentralized, can be controlled by many. So there's a decentralized governance, and who manages this governance. Now, that's one way to go. There's a lot of hype on DeFi, decentralized finance, which means the ledger is not in control of a single platform operator. It's not in control of the central bank. I think what will probably be more likely is that the BlockFi, so that's just another term we could mention, is where the platform, there's a single platform or two platforms controlling two ledgers, so each platform controls its own ledger, will be more prominent in playing out. And there will be, there will be a platform for the automotive industry. There might be another platform for the textile industry. And all of these platforms for each industry, they have to make a decision which they issue a token, and the payments from all the suppliers in these industries, they will use some tokens. And how do we nominate these tokens? Will it be in dollars? Will it be in renminbis? Will it be in Indonesian currency? Or will it be its own currency? And you can also see that the platforms might also change their denomination of the currency very quickly. So you can see currency substitution effects kicking in much more dramatically and much more quickly. And that might also raises some stability issues. And if you have a very attractive CBDC, you can lean against that. You can say, okay, you might also use the attractive CBDC, but now we'll come to that, what I call the smart CBDC. The CBDC design matters a lot. Is it possible that you can connect your CBDC with the ledger of the textile industry? Can you integrate the whole thing or not? So whenever there's a little supply happening from one SME to another SME, or there's some automatic payment execution, is the CBDC ledger integrated in that? And if the CBDC ledger is not integrated, then actually it's problematic because then there will be the private platform ledgers will be much more attractive, and then the CBDC will play a much smaller role. So in the next slide, let's skip that in the interest of time. And there's, of course, just to highlight, there were 3 reports out there, and there's quite a controversy. What's the role of CBDC? What's the benefit of CBDC? And, I just mentioned 3 reports. So first one is by the Federal Reserve, Money Payment US in the Age of Digital Transformation. And it's very non-committal. So the Federal Reserve issued a report on CBDC, and the emphasis is essentially not to do much on the CBDC side. And there was even one governor, Chris Wallace, saying, oh, a CBDC is a solution for not in search of a problem. That was picked up later on by the House of Lords in the United Kingdom. And both of them, the US and the UK, United Kingdom and United States, are actually more skeptical about CBDC. And while in Europe, in the continental Europe, the European Parliament commissioned a report, which I wrote on the digital euro, there's a rethinking of money in the digital age going on, and there's most likely a digital euro is on its way, it's coming. So that's there's a very different attitude across different countries, and I will highlight what I envision, why the attitude is so different, and what I see different continents doing essentially going forward. So let's move to the next slide. And the governor mentioned already, it's important, one reason why you might do CBDC is to maintain sovereign monetary sovereignty. So you want to be a sovereign, and as the governor mentioned, a country has to have a currency to be a sovereign country. If you lose your currency, then it's not essentially a fully sovereign country anymore. And that's one of the big issues. So, but what is monetary sovereignty? And the different aspects of monetary sovereignty. One is that you can conduct monetary policy. What does it mean? You can actually manage the business cycle. You can actually stimulate the economy. You can slow down the economy if the economy is overheating, and you control essentially the unit of account. And controlling unit of account means people write contracts, they pay in your local currency, they write debt contracts in your local currency. And as long as people do that, if you then change the interest rate, you can actually stimulate the economy and slow down the economy. So the most important aspect, I think, of monetary sovereignty is actually that people use your currency and denominate their debt contract in your currency, and they think in your currency. And in the future, it's not clear how relevant it is that we really think in the local currency, because you might have your Apple or Google glasses on, and if you go in a store, it will immediately translate it in your favorite currency. So the coordination to a single currency will be less a binding glue than what it is now. So all new technology will change that. Now, the next aspect is that people say, or countries say they want to have monetary sovereignty. It's because they want to enjoy the scenery. So you get some rents for money creation, and that's essentially the central bank would like to keep that. Of course, to a large extent, the seniorage benefits goes also to private banks because they also create a lot of money. That's the second component of monetary sovereignty. The third component of monetary sovereignty is the power to bail out some banks. So the central bank can decide, we actually provide emergency funding to this bank, but we don't provide it to the other bank. And there's a lender of last resort activity, liquidity provision, but the power to decide which banks will be rescued, which ones will be not rescued, and that's a powerful sovereignty aspect to that. And the fourth aspect of monetary sovereignty is essentially you can decide whether to exclude somebody from the monetary system. So if you are a country, you typically don't exclude anybody from your monetary system because that's part of mandate to provide some monetary services or cash services to the whole society. But if if Facebook or Meta were to run some currency system on its own currency, it could say to some members, we don't like you, or we don't like what you do, and we exclude you from the system. And the exclusion power is very, very powerful. Of course, the dollar is excluding certain countries. So, for example, that when sanctions are imposed, so that's exclusion power, and that's also part of monetary sovereignty. So monetary sovereignty has different elements. I think the most important one from an economic perspective is essentially the ability to conduct monetary policy, but then also seniorage rents and the power to bail out and then the power to exclude. Now let's move to the next slide. So there's now a threat because of digital dollarization. Then that is possible that you lose your monetary sovereignty. If suddenly the societies starts using primarily a foreign currency or using a digital currency from a private entity, which is not denominated in your local currency, then you lose your monetary sovereignty. That's digital dollarization or digital liberalization or digital de-emulation or whatever you want to call it. That's essentially the loss of monetary sovereignty. If you lose the unit of account, that's a big threat, and that's a radical change. And that's where it's very important to maintain the unit of account in your local currency, that people use your local currency and they don't use currencies denominated in a different currency, and don't write debt contracts or mortgage contracts denominated in a different currency. And if they do so, you lose your monetary sovereignty. And that's essentially why the biggest concern for many emerging economies, that they might lose that. And, that things will be dollarized or they will be moved to a different way. So just give you an example, it could be that many people will use in your country WeChat Pay or Alipay, and they do pay everything in renminbis. And that's essentially a different currency. for example, United States, there are a lot of Chinese people, when they go to a Chinese restaurant, they pay in with Alipay or WeChat Pay. They pay in the United States, not with dollars, but they pay with renminbis. And that means, it's renminbization already going on in the US. And you can see that in certain countries, this is probably coming much more prominently. And I will go to this digital dollarization where actually will be more problematic and more pronounced in the next slide. So if you think about what's a currency area, traditionally a currency area was a country. And that's what the governor said, a country and the sovereignty of a country is essentially given by the currency. The borders of a country is also the borders where the currency is used. But in the future, currency area will be based much more on social networks, on platforms of industries, on economic activities, and it might be even governed by privacy regulation. Okay, so that might stay regional. So if we move to the next slide. So how do you see these digital currencies evolving across the globe, and which are different strategies will actually people follow? And so the aspect is I would like to say is the following. So I mentioned already in the United States, the appetite for CBDC is not so pronounced. But will this mean that the US dollar will lose its dominance? I would argue strongly against it. And why is that? Because you see a lot of these platforms, I mentioned this automotive, textile, or other platform, they have to denominate their token with something. Essentially, the token they have, most of them, there will be stable coins, and more than 95% of the stable coins, they actually denominate in US dollars. So there will be a lot of industries and a lot of social networks which will issue tokens, and they will issue it and denominate it in US dollars. And so the challenge for the United States is not, should we issue some digital dollar in order to make sure the dollar stays dominant currency? Said, how should we design stable coins that regulate stable coins that actually stable coins will stay stable as their name suggests, and they're sound and solid from financial stability perspectives. Okay, that's essentially what the US strategy will be. Now, what's the European strategy? The European strategy is very much focused on the CBDC, on the digital euro. So the digital euro is a CBDC for Europe. It's very much consumer focused. And the mindset is different for the Europeans. The Europeans is much more, they want to have a digital euro, which actually can be used, and Benedict mentioned this too, it can be used as a catalyst to introduce some digitalization in the economy, especially for small and medium enterprises. Okay, so use the introduction of CBDC to digitize the economy much more. And for Europe, it also means to some extent to you replace the dominance of US credit card companies with something which is more based on a digital euro. So put it differently, all the merchants, they probably have to buy some new terminals for digital payments in their shops and all this, and you use that to essentially break the dominance of the US credit card companies to give more sovereignty in this regard to Europe, just in case if something were to go badly in the US. And this is also from a geopolitical perspective, it's one of the objectives in Europe. Now, in China, if China wants to spread its renminbi, it can spread it most easily with Alipay and WeChat Pay. So, of course, there's a digital yuan, but if we want to spread it to other countries, you do it through Alipay and WeChat Pay. And I mentioned this already, that in the US, many Chinese friends or many people I know from China, they use the Alipay and WeChat Pay when they pay for in Chinese restaurants. So that's a way to spread it. And if you have a big Chinese minority in your country, that's the way you spread the use of your currency in other countries. And that's how you get to make your currency more global. So all of these strategies essentially are more offensive in the sense that you develop and bring the currency to other countries. Now, the emerging developing economies, they are worried that these big currencies will go across the globe and will become more dominant than they already are. And that's why they say we have to offer an alternative digital position, and that's to avoid this digitalization. And that's a primary objective for many emerging economies, developing economies, to actually not to lose the monetary sovereignty and keep the seniorage rents and so forth, and issue a digital alternative to their cash, or digital on top of the cash, physical cash. You also issue some digital things in order to protect the monetary sovereignty. So that's how I see it. The US going through stable coins. Stable coins are US dollar denominated, spreading easily through supply chains across the globe. The digital euro, more consumer focused, mostly used as a catalyst. China spreading their currency through Alipay, WeChat Pay. The fact that they're stepping down, that the official sector is stepping down on these private companies is going a little bit against that. But would be the optimal strategy to spread your currency across the globe. And the emerging economies being threatened and saying we have to develop our own CBDC as a defensive mechanism to defend that. So let's move to the next slide. So, of course, in the US, one reason why the stable coins and not CBDC is that the private sector says, okay, the private sector, the political economy is that the private sector, and we will do some initial coin offerings, create all the private seigniorage, and then the second step, we want some regulatory stamp and guarantees from the government. Okay, so you can see where the political pressures are coming from. And as I mentioned, in Europe, it's like, bringing the monopolies in the US credit card business used as a catalyst also for the private banking sector, which often cannot coordinate enough to get some new digitalization initiatives through, use the CBDC as a catalyst to, in a coordinated fashion, to push some digitalization through. So that's very much what Benedict mentioned as well. So next slide. Now, if you have digital money, an issue, and I just want to mention is always privacy. So how should you deal with privacy? And one approach, if you have cash, privacy is naturally baked into cash because nobody sees how much cash you have in your wallet, and nobody sees the whole picture. And the beauty of what you want to do is you also would like to have a system where you have a jigsaw puzzle. Essentially, everybody sees a little piece of the puzzle, but nobody sees the whole picture. And that's ingrained, the privacy in cash, it's ingrained as privacy. In digital money, it is not, because it's a ledger is just global. And if somebody can see the whole ledger, then there's essentially potentially no privacy security. Now, the thing is, how can you carve out make the whole picture more like a jigsaw puzzle, and you can only see parts of it? And you have to differentiate between different types of, when you want to design the privacy regulation in such a way, you have to design the privacy in such a way to keep in mind what information you want to keep private and what information you want to pass on. So, for example, there's certain information which is your own, like your own payment history, your own DNA, your own X-ray. This is own private information. But how the information is then correlated with other things, so the correlation structure, that should actually be public information. You don't want to hide that information. So, for example, how is the DNA you have, the DNA of a population, the distribution of DNA, how is it correlated with certain cancer arrival rates or cancer propensities? So you want to make this information available. This information should still be available. Or, each individual X-ray is yours, but the connection of the X-ray with some diseases or something like that essentially should be still public information. So you want to regulate in a smart way to keep the own private information in its own, but the pattern across these different things, the anonymized patterns, that actually should be public information. And then the second complication is that, the private value and the social value of information is very different. And, that's problematic. You have to keep in mind that sometimes the private value of information is very small, but there might be huge social value to that, or the other way around. And of course, in the big picture, there's always a trade-off. The more privacy you give, the more possibility there's for crime and corruption. Okay, if you want zero crime and corruption, you have to take essentially all privacy away. And there's probably an optimal interior solution. You give some privacy, knowing that if you have more privacy, you have a certain amount of crime and corruption, which you can tolerate. You don't want to tolerate too much. But if you go for zero crime and corruption, you have zero privacy anymore. And, you want some privacy as well. And that's a trade-off the policymakers have to decide. And that actually should be decided most likely beyond the central banks. That's a societal question that has to involve the parliament, the society, to determine where the trade-off essentially is. So next slide, please.
Professor Marcus, if I can just interrupt, you have only 5 minutes. If you could please narrow down to your conclusion.
Well, I will be very quick in 3 minutes. Hopefully I will be done. Thanks. So let me just say a few more words about financial intermediation and CBDCs. That's about banks. Will the introduction of CBDCs introduce the run risk on banks, on private banks? Because CBDCs are the additional safe harbor, and hence, or will also CBDCs, will it be so competitive that it will rob the private banks of cheap funding, deposit funding, and hence makes credit extension more expensive? And that's why that's a balancing act for the central bank. On the one hand, you want to be successful with the CBDC, but not too successful. If you're too successful, you'll drive out private banks. And the other challenge you have with CBDCs, you have a huge political footprint, because now private citizens give money to the central bank, so it will be a liability of the central bank, and the central bank has to pass on this funding to potentially private banks, and then central bank can then decide which private banks to pass on this funding to. And that increases the political footprint of the central bank, the political power of the central bank, and that needs to be taken into account in the governance structure. So let me move to the next slide. So let me just show you why it is the case that, financial intermediation and CBDC might not crowd out funding. So here I have a little economy, and I can't really point to that, but you see the firm's balance sheet on the very left side. The firms have some liabilities in form of firm loans, which are assets for the banks, and the banks have liabilities mostly in form of deposits, which are then assets of the households on the very right side. And then there's the government, and the central bank is the third block of the balance sheet of that. So now if the central bank uses CBDC, now the money block, the blue component, which is a liability of the central bank, that's like cash and is an asset for the households. But if you move to the next slide, let's suppose the central bank is introducing CBDC. If you move to the next slide, now you can see suddenly we have much more money, because now we have central bank digital currency as an additional form of this blue block that drives out some of the deposits. So the households have fewer deposits, and now the banks have fewer deposits to issue to the households. But if the central bank is just funding the banks through this additional funding that central bank gets, so the blue box becomes larger, this additional funding, if it passes on to the private banks, the funding is not changing at all. So you can actually do a CBDC introduction in such a way that the banks are still funded the same way. But the big difference is now the central bank has a bigger political footprint, because the central bank is now deciding which bank is getting this funding and which bank is not getting this funding. So let's move to the next slide. And then I would just want to say a few words about runs, and then I conclude. Are runs more likely with the introduction of CBDC, because CBDC is a new safe haven? And I would say not necessarily, and actually it's not clear at all. It's probably the other way around. So if there's it's a run on a single bank, you can still already run now in another private bank. So the safe haven, having an additional safe haven, is not an issue. Now, if there's a run on the whole financial system, now what happens nowadays, you run abroad, you leave the country. But if you have a CBDC, at least you run in your own central bank, and the own central bank then can channel the funds back. As I've shown in the previous slide, the central bank is channeling the funds back to the banking sector, so you can stabilize the system. So the fact that you can actually channel funds back after a run is actually stabilizing the system. And the central bank sees the run much more quickly as well if they were to run. So overall, I think the runs will be less likely, because the runs will go into the central bank, and the central bank can just channel the funds back which is not so easily done with cash withdrawal from cash through the ATM machine. So let me move to the last slide. So what I wanted to say is that things are changing, the economy is changing, our abilities to create data, big data is changing, but our ability to extract data is changing. And most importantly, we have these platforms emerging that create their own forms of money. The question is what currency they are denominated on. These tokens, are they dollar denominated or in the local currency? And digital money, what's special about digital money? It has a ledger. It has a digital ledger, and you can combine the digital ledger with other ledgers. So the strengths of CBDC, the information processing through artificial intelligence, distributed ledger technology, platform DeFi and PlatFi and so forth. Monetary sovereignty is important to maintain in order to stimulate the economy or slow down the economy. So you want to macro manage the economy. And emerging economies have to watch out for this digital dollarization. And we will probably see different digital currency areas which are not necessarily characterized by the boundaries of a country anymore. So that's why, you have to take this into account. And the financial intermediaries, they might be affected by this, or they will be affected by this, but how they're affected depends very much on the design of the CBDC. I couldn't go in details into this, but I'm less concerned about having additional run probabilities or runs on banks. I think if the central bank does it right, the run possibilities are not higher. And then finally, I talked more about DeFi and PlatFi and also the privacy aspect I tried to touch upon as well. Thanks again, and sorry for running over a bit.
Thank you very much. We will move to the third speaker, Professor C.P. Chung. You can move in the front since you are in-house. We will then take questions after the third speaker has finished. Professor Chung Ping Chang is professor in Xi'an University, Taiwan. He's a co-editor of Emerging Markets, Finance and Trade, Q1 SSCI Journal. He is editor-in-chief of Innovation and Green Development, which is a new journal. He is part of the board of editors of the BMEB. He also serves as the vice president of the Asia Pacific Applied Economics Association, which is one of the co-partners in this conference. Professor Chung has a long engagement with research in energy economics, environmental economics, political economics, macroeconomics, and applied econometrics. He has published more than 150 papers in leading journals. His work has been cited over 11,000 times, and he enjoys a H index of 36. It's my pleasure to welcome Professor Chung to give the third and final talk. You have 35 minutes. Thank you.
Thank you, Professor, the moderator, Professor Nayorang, Paris Nayorang. And I'm also happy to back the conference after 3 years. I think that it's very, very happy to see many of my old friends and have the contact with them, have many new friends. So I also have to send my congratulations to the BI because we have the very, very successful conference, and also say my thanksgiving for all the work team of the BI members. I need to thank your hard work for everything. Thank you. Thank you. I'm also honored to be invited to the presenter and make a keynote speakers in this conference. So today I have my topic is the CBDC, green finance, and sustainable development. Evidence from the China. Okay, so this is the content for my presentation. We have the 5 sections for my presentations. And the first section is the introduction. And the next one is the institutional background. And the third one, the theoretical mechanism. And the next one, we have to make a initial statistical analysis investigations. And the last one is the conclusion remarks. Okay, with the development of the digital economies, we think that the currency system is on the path to breakthrough change. Central bank digital currencies, we call it CBDC, is regarded as the most important progress to adapt to the digital era in the economy fields. According to the surveys of the BIS, I think that they have the 86% the central bank have actively exploring the CBDC, and 60% of the that is on the stage of the proof of the concept. At the 2019, the China Payment Journal surveys, it also suggests that they have the 46% respondent have no cash transactions during the survey periods. It is well accepted the CBDC will be the payment infrastructure in the digital economy eras. So many scholars also have studied the impact of the issuance of the CBDC on the banking system. But most of the previous findings believe that this impact will be negative, because issuing a CBDC will first make the central bank deposit monopoly. It's also a threat to all the deposits from the commercial bank sectors. But we believe that the essence of the CBDC improved the security and the transparency of the money, which conduce the higher green finance, more probability to issue the green finance due to the positive associations of the green finance and the environmental performance. So we also expect that CBDC can play a role of driving green finance and the sustainable development. So, however, we can find how CBDC affects the sustainable development received in the limit discussion and the investigation by previous finding. So the goal of our research is in investigating how the CBDC affect green finance and the sustainable development in China. So our research aims to answer the following questions. The first one is from the theoretical perspective, how CBDC affect the green finance development, and how CBDC affect sustainable development through green finance. The last one is what is the effect of the CBDC pilot in China on green finance and sustainable development. So I think that we have highlighted the two improvement of the compare with the previous literatures. The first one is that we use the China case. We analyze how CBDC affect green finance and sustainable development. And the second one is that we carry out a statistics investigation based on the CBDC pilot in China. We can offer a primary finding about the CBDC and green finance and the sustainable development for the interaction relationships. And we also present our initial evidence, and in our preliminary finding is indicated. Actually, in those pilot cities in China, we find the evidence of the CBDC really promote more green finance and also bring to the sustainable development in China in some indicators. So the next section is the background, institution background. I think that we have asked the similar question like at the keynote speech like the Governor Paris. So why China needs the CBDC. So because with the arrival of the digital eras, we think that the currency experience the fast development, especially for cryptocurrencies. So the cryptocurrencies like the Bitcoin, the born at 2008, try to pave the way of a decentralized and the comparative anomaly in the money field through use the blockchain and encryption the technologies. But however, more evidence shows that due to the lack of the actual transaction values, because the high fluctuation and the big fluctuation for the variance in the price for the Bitcoins, and the low transaction efficiencies, so many cryptocurrencies received the critical price from the economists, especially because the cryptocurrencies mostly use the speculations, which threaten the financial security. And so at the same time, in China, the mobile payment have accounted for the main population of a payment in China. Okay, so the next slide, I need to introduce the process of the CBDC development in China. The People's Bank of China tried to explore the model of the digital currencies. In 2014, a digital currency research group was set up to research this framework. In 2016, the Digital Currency Research Institution was set up also to compare the first generation political tap system of the digital currencies. And then at the end of the 2017, with approval of the State Council, the People's Bank of China began to organize a commercial institution to join development legal digital currencies. And then the 2019, digital currencies in China generated. And that's the pirate in the surrounding some city. So the pirate cities in April 2020, the People's Banks of China, they announced the first batch of the digital renminbi pirate cities. They are include 4 cities. I think that they are well-known cities in China or in the world. The first one is Shenzhen, and second one Chengdu, and then the Suzhou, and finally the Xiong'an, are very near the Beijing. So in November 2020, the People's Bank of China also added 6 new CBDC pilot areas, including the city of the Shanghai, Hainan, Changsha, Xi'an, Qingdao, and Dalian. This is the type of CBDC for the Bank of the China, People's Bank of China. We can use a cell phone to make some of the transaction and the operation. Okay, so I think that there are some profiles for the CBDC in China. The first one is the CBDC in China can use as an account and the value store. The second one, no interest pay for CBDC, because the main reason is avoiding the comparison with the commercial bank deposits. And the third, CBDC follow the principle of the small amount of analysis, but the large amount for the transferability in accordance with the China law to enhance the transferabilities. And the fourth, CBDC is loaded with the smart country with the realized peculiarities. This implying the CBDC can be used according to the premise of the insurance security and the compliances. And the last one is, I think that is the most important point, because the two-tier model comparison with the comparison of the people of the Bank of China and the commercial bank have the code of they can join the CBDC programs. So this makes they can organize all the resource, no matter People Bank of China and the private commercial bank. Okay. So the next one, we move the theoretical mechanisms. Okay, I think that they have the three mechanisms in which why the CBDC can affect green finance potentially. The first one reason is the CBDC can improve the financial reviewing process and promote green insurance. Due to the high risk for the most usual of the environmental friendly projects, so green finance require a detailed pre-issues review to examine the variety and avoid the financial fraud. So this is usually case where spend a long time in review process for the general green finance loan. The second one is the CBDC can enhance the efficiency of the green finance use, because once the loan is sent to the firm's enterprise, financial institution, it means most of the commercial bank, they can receive insufficient information about the progress of the only to the information asymmetries. So the transparency of the CBDC is capable to help the financial institutions to supervise the progress of the investment green projects. The next one is the CBDC can strengthen the social confidence on the green finance and extract more funding from the social capitals. Okay, we also believe the CBDC will promote sustainable development through the following effects. The first effect is we define it as the allocation effect, because the green finance provides the financial support for the expansion for the clean industries. And the CBDC, this growth in the green finance, and that's promote more sustainable development by relocating the resource across the industries. The second effect to bring the effect of the sustainable development, we call it as the technology effect, because green finance provides more available capital for the green R&D through the external finance and promote green technology progress. So according to these reasons, so we expect CBDC this grow in green finance, and less more green finance that bring the higher probability to promote the sustainable development by fostering the technology progress. The final effects we define as the synergy effects, because the green finance is not solely relative to enterprise itself. It also have the spillover effect. It will bring the influence to send the information to similar enterprise or with similar background enterprise. So the successful of the green investment will reduce and encourage the signer to the similar enterprise. This is inducing similar enterprise to take the action and adjust their behaviors. Okay, so the next session I need to introduce some statistical investigations. So mostly we can find from the 2021 and to the 2001 and 2002, we can find in the June of the 2021, transaction value is only the 34 billions for the renminbi, but this amount go up to the around the 56 renminbi after 6 months at the October 2021. And when we move the time to the 2022 May 31, we can find the transaction values go up to the 83 billion renminbi. So we can find a very, very significant trend, go up, the growing trend for the CBDC transactions. Because we have the data available, so limitations, so we only select 9 cities in the statistical investigations, including Shanghai, Dalian, Chengdu, Haikou, Shenzhen, Suzhou, Xi'an, Changsha, and Qingdao. We use the green bonds issued to practice the green finance development. So the data of the green finance, which uncovered all the green bonds issued during the period from the 2018 to the 2021. So we can find in those CBDC pilot cities issued higher and more green bonds, we can find the transaction amount, the transaction value of the green bond is rising as well. When we in the discussion, the relationship between the CBDC financial development and green finance and the sustainable development, we think that we need to consider heterogeneous effects for the pilot cities because CBDC pilot cities show the large difference, no matter in the location, the income levels, and among those industry structures. I think that this difference will bring the different relationship between CBDC, green finance, and the sustainable development. For instance, we can find that Shanghai is located in the coastal area in the China. It's known as the high income, the area in the China. And so it means it may be the demand, demanding more green finance to construct the clean environments. The other example is Chengdu, located in the inland area for China. Because it's the economic development is relatively lag with the Shanghai. So this means the Chengdu has less demand for the green finance. So meanwhile, they bring the relatively lower sustainable development. So we have the table we can show. We can find the Shanghai and the Shenzhen experience the fast growth in the green bond amounts. So green bonds of the Shanghai at 2018 is around the 2.3 billion, but go up to the 32 million at 2021. We can also find some example, CBDC pilot city do not witness growth in the green bond issuance, such as the city of the Dalian and Chengdu. So we move our eyes to look at some of the difference in the industry structures. We can find the most industry with the little change in green bond issued, but example, 3 industries, including the public affairs, manufacturing, and finance. We can find that the amount of the green bonds grew from the 12 billion at the 2018 to the 27 billion at the 2021 for the manufacturing industries. So the amount for the green bonds grows from the 8 billion at the 2018 to the 14 billion at the 2021 for financial industries. So they are a very big difference. So for the background of the enterprise, we can find the central SOE. SOE means the stand on the enterprise. no matter central SOE or local SOE, they contribute to a large share of the green bond growth in China. So the transaction value, the transaction amount for the green bonds grew up from around 7 billion at 2018 to 26 billion at 2021 for the central SOE. So once we confirmed the impact of a CBDC pilot program on the green finance in the pilot cities, the next step we need to identify where CBDC promote sustainable development via the channel of the more green finance. So we select 5 indicators for the purpose analysis on the data available, including the SO2 emissions, the NOx emissions, smoke emission, green land ratios, and the green total factor productivity. The first 4 indicators include the SO2, NOx, smoke emission, and the green land. We take the data from the Chinese City Statistical Yearbook, and then we calculate the final green TFP by ourselves. So we can find the first one indicator for the sustainable development. The total smoke emission increases slightly at 2019, where it started to decrease at 2020 and 2021. And the next, for the NOx emissions, it decreases at the mid of the 2019, where it experienced a significant drop no matter 2020 and 2021, a significant drop. And the next one, we look the case of the SO2. We also find you have the evidence decreases trend for the SO2 emission before the 2020, and the decreases trends is emitted at 2020 and 2021. We also find a similar evidence for the green land ratio adjust. They just go up, especially at the 2021. But for the green TFP, we can find we cannot see a significant growth in the CBDC pilot cities. We think that due to the productive improvement require long-term progress. So CBDC pilot program is very, very hard to increase the green TFP in the short time. Okay, the final section we move the conclusion remarks. So this research and our paper is trying to provide a primary theoretical and statistical investigation on the relation between the CBDC, green finance, and the sustainable. Use the case of the Chinese enterprise. Because the Chinese launched a CBDC pilot program at the end of the 2019 and offered us an opportunity to discuss it. So the finding implies that the CBDC actively encouraged the issuance of the green bonds, both in terms of the quantity and the transaction values. In particular, the CBDC expanded the issue of the green bonds in the pilot city with a higher income and loss in the industry sector and in state-owned business. So additionally, we also send the evidence it has been discovered the CBDC increases the ratio of the green islands, lower SO2 and the NOx emissions, then reduce the smoke emissions, all of which are helpful for the sustainable development. But I need to mention, it should be noted that our goal is not to apply econometrics analysis that we leave for the future research. Because if more data we can get, a scholar can import econometric models to confirm whether CBDC is a significant and robust effect on the green finance and the sustainable development. Okay, that's all my presentation. Thank you, everybody.
Thank you, Professor C.P. Chung, for very interesting discussion and sharing your findings on green bonds and central bank digital currency. We've come to an exciting phase of the plenary session where we will have question and answers. But before I open the floor and take questions also from our researchers joining us online, I want to summarize the key messages coming out of the three distinguished speakers here this morning. First of all, thank you again to all the three speakers for very stimulating discussions, and more importantly, sharing new insights and new ideas that are likely to inform new research ideas from all of you here who are actually working on digital currencies. The commonality in the discussions, I can see a convergence on the role of digital currencies, the challenges that it brings. We have seen the discussions from Mrs. Nolan. She highlighted geographical barriers and hence the viability of the CBDCs. She also talked about institutional and regulatory factors that matter. We of course know in larger emerging markets such as Indonesia, the informal economy is large. So obviously there are implications for digital currencies and how it functions in an economy that is that is characterized by a large and growing informal sector. From her presentation, we also were alluded to the fact that CBDC is also a liability for central banks. From Professor Marcus's discussion and his presentation, he talked about importantly the monetary sovereignty that is there with respect to central bank digital currencies, and he also talked about the loss of sovereignty in that space and the role of digital dollarization, which I think is a very, very important issue for us to start talking about, start discussing, and having a literature around that to be able to inform policy. He also discussed some of the privacy issues that goes and the need for a better or enhanced governance structure. And of course, he also focused on financial intermediaries. Professor Cheng's discussion was quite interesting. He brought a new perspective to the discussion on central bank digital currencies and its effects on green finance and sustainable development. And interestingly enough, he has identified 3 channels through which the relationship between digital currencies and green financing is potentially likely to flow, and these are allocation effects. He talked about technology effects, and finally he talked about the signal effect. So we have got a very nice sort of introduction and insights on digital currencies and some of the challenges that we as central banks need to start ask. And I'm pleased from the point of view of the BMEB, the Bulletin of Monetary Economics and Banking, because these are some of the topics or sub-themes that we want to capture and publish in BMEB. For the obvious reason, as you know, BMEB continues to grow in terms of its impact, citations, and we want to publish topics on which there are active policy discussions, such as digital currencies. And I'm particularly pleased with some of the ideas that have been shared, and I'm hopeful that BMEB is going to publish some of these papers. There's some related themes that will be part of the parallel sessions in this conference. And I'm really pleased to see that digital currencies is gaining the type of momentum that we would want, particularly as the Bank Indonesia leading a lot of the research in this space. Now, with those words of summary and sort of background, also trying to bring into the picture the role of BMEB in promoting this line of research and ensuring that we generate the type of impact we want to as central bank economists, as central bank researchers, which has implications on new ideas for PhD students and so forth. I want to open up the floor for questions and of course comments. I want to abuse my authority as the moderator to ask the first question and then of course take the questions from you. My question is very simple, and it's to either one of the three speakers. When we talk about central bank digital currencies, we often have in mind the bigger central banks, which of course includes Bank Indonesia, and as the Honorable Governor Dr. Periwarjo alluded to in his opening remarks, a lot of the lead work that has been undertaken already by Bank Indonesia, which is quite impressive when you think about it. My question is, how do you see digital currencies or its role in shaping monetary policy for smaller central banks? How feasible is it? Because we often tend to ignore these smaller central banks in this type of policy discussion. So I think this would be something on which we can attract more research and maybe publish this in BMEB. So yeah, I'll be very much interested, to have some discussion on the role of the digital currencies with respect to smaller central banks. Thank you. Professor Sipi, you want to go first? Yeah.
Yeah, I can take this question if you want.
Yes, please.
Yeah, so I need to apologize as well because I'm booked back to back for another public speaking, and that starts in 15 minutes. So I can only stay another 5. But I will drop here in the chat the paper on which I prepared the presentation that I gave earlier, and it involved actually quite some smaller markets. So I think at this stage, the development of retail CBDC is not limited, so to say, to larger markets. And in fact, some smaller markets see an equal or greater need for it because as I mentioned to you at the beginning, there is quite some advantage in terms of PSP development. There is an advantage in countries with large populations like Indonesia, India, and China I cited. Inversely, in very small countries, the private sector may not plug the issues that I had indicated in terms of financial inclusion. So, for example, a smaller country with many islands will have a very ill-functioning access system in terms of financial access to banks. And as mentioned, maybe also, for example, a lack of ATMs. So those kind of economies are looking at introducing CBDC. And an example I raised is Bahamas. But from the list I shared earlier, there's also economies like Ghana on it, etc. So at this stage, the investigation of retail CBDC is not limited to bigger countries. And I will drop the paper in the chat.
Okay, thank you. Is there a response from Professor Marcus?
Yeah, I very much agree what Benedicta said. It's, actually, indeed, as the Bahamas, as you can see, as smaller countries, they're also moving into this space. And the threat probably to be dollarized or digitally dollarized is much bigger for smaller countries. Hence, the incentives to set up a CBDC as a defensive mechanism is also more pronounced. And this way, you can see it. Of course, there are huge economies of scale to set things up. And if once you develop the software, develop all the electronics, you can scale it up much more easily to the economies of scale. That speaks for larger countries. But on the other hand, the benefits of protecting a monetary sovereignty is also larger for small, or the threat is bigger for smaller countries. Hence, the incentive is also larger to set up your own CBDC as a defensive mechanism. And that's why we also see smaller countries moving in that space on top of the large countries. What's more surprising is that actually, the very advanced countries like the United States and large countries are not moving so fast because they're going more the stablecoin route rather than going the CBDC route. And that's a big difference we see in terms of advanced versus not advanced, but in terms of small and large, I think that's a very good question. It is small and large, I think, moving that space, despite of the economies of scale effects.
Thank you, Professor Sipi.
Thank you, Professor Persh. My comment is that because Indonesia have a very similar development background with China, I think that in China, they have the better, I think it is the fundamental for the mobile payment, including the Ali payment, including the WeChat payment, and the 支付宝. So I think that I just highlight in my conclusion is that because in China, they have the, I think they move faster comparing with the other countries because they started action at 2014. But just in the way that only 2.5 years from the 2020 to 2022. So I just mentioned, so for my presentation is that we just summary some data available for my presentations, but everything, if you need, my suggestion is that I think it's the time of the digital eras. So just do it. Everything is not 2 days. So I encourage the BI or the other central bank. We can carry on the CBDC, the payment, prepayment. Thank you.
Thank you. Thank you very much for all your responses. Let's start to take some questions from the floor. Yes, there's a hand up there. Please identify yourself, the institution you are affiliated with, and then you can direct your question to any one of the speakers. Thank you.
Pares. I am Putra from Bank Indonesia. I would like to address my question to Benedicte and Marcus. How do you foresee that this CBDC and cross-border CBDC will be usable across a regulatory regime? Would it only be widen the gap between the country that have technology and resources to become a member of such a platform than those that don't?
So again, I'm happy to take that question, and after that, unfortunately, I'll need to drop pretty soon. But the answer is no. So in some, the wholesale platform, like I included in the chat, like the Enbridge platform, does not require the country even to have a retail CBDC. So the country could become a member of the platform without needing to first have rolled out its retail CBDC. Now, if the country has a retail CBDC, then most logically it will likely create a plug between that CBDC system and the cross-border system, which could be something like Enbridge, a multiple CBDC platform. So we will eventually also work even on generating these plugs, so that the country itself doesn't even need to create that plug. But yeah, so the difference you could say with an Enbridge is that it is actually a payments platform. And it's slightly different, therefore, in my view, from a retail CBDC, because a retail CBDC is actually mostly a digital representation of a bill, right? A current bill or a coin. That's also why the E1, for example, is giving you the image of the bill to make sure that you understand this is actually just the bill in a digital form. whereas something like Enbridge is a payment platform to speed up payment. And again, for that, you do not need to have an advanced development within your country. You primarily need a RTGS system, which most countries have.
Okay.
So with that, I'll need to drop, unfortunately, but thank you very much for having me here today.
Thank you.
Thank you. Bye.
Yeah, Professor Marcus, you want to respond to that?
Well, essentially, Benedict answered it very well, so there's very little to add. I think I don't think technologically these settings are so difficult that smaller countries cannot take on it. There's always will be some company which can do it also for smaller or less developed countries. So I don't think, and we see a lot of payment advancements in emerging economies coming first before they come to the advanced economies. So that's why I think I'm less concerned about this. But I think the previous speaker has made it very clear, and it was very well answered already.
Okay, thank you. Next question. Yeah, Professor On Rizvi.
Hello. Thank you very much. My name is On Rizvi. I am an associate professor at the Lahore University of Management Sciences and member of the Asia Pacific Applied Economics Association. So, with the traditional currencies, and especially with the smaller economies and the HIPCs, the heavily indebted poor countries, the flight to quality, the flight of capital controls is something which is used as a policy tool very often. Do you foresee that with digital currencies and cross-border platforms, this flight of capital and capital controls will become an ineffective policy tool mechanism? Because even in the recent past, we've witnessed quite a few countries imposing some form of physical capital controls to preserve economies. But if you go into a digital landscape, do you think that might become a bigger challenge?
Thank you.
Perhaps I can say a few words.
Yes, please.
I didn't fully understand the beginning because the sound was not coming across the Atlantic or across the ocean so well. But the question is flight to safety, capital flight out of countries. Do you need to impose capital controls? So first of all, if everything is digital and if it runs through CBDC, it's of course easier for the central bank to see what's going on, and you might be better informed as a central bank. But what's really the issue is currency substitution. Is currency substitution more easy or less easy than it is currently? And one thing you can think about is that right now it is the case that, if there's a run on a currency that requires a lot of coordination among the citizens to run on its own currency, of course, fear can trigger that. But if you have currencies linked or certain tokens linked to certain platforms in form of stable coins, you have an additional run possibility that in a coordinated fashion, a whole industry, let's say the textile industry, says, oh, we don't denominate our currency anymore to the local Indonesian currency, but we denominate suddenly to the dollar. And suddenly a whole platform is switching, and they can coordinate in a coordinated fashion, switch much more dramatically in a much more radical fashion very quickly. And that's something one has to be concerned about. So the currency substitution effect will be more dramatic, and that also can lead to more radical, larger currency swings on top of the flight to safety, which we have already now. So there's different forces at work. So certain fair forces because you can observe things better. That's an advantage. But there are also the currency substitution effects, which are more pronounced. That's a disadvantage. And so we don't know yet what will dominate. I'm afraid it could be that the currency substitution effect is much more pronounced. So you may see more radical exchange rate movements.
Thank you. I think in addition to that, that's a very good question, which also implies that we need to do more research and develop a body of literature around this central bank digital currencies, particularly how it will impact the sustainability of financial markets, capital markets, and indeed the banking sector. So there's a lot of kind of unknowns here in terms of what sort of effects are we likely to see, whether it is going to lead to more volatility in the markets in the short to medium term, and what sort of threshold effects would be there with respect to different monetary indicators. So there's a whole range of issues there, I think, which your question is actually leading to. And I think the response from Professor Marcus is in that same spirit, that we probably don't understand. There's a lot of uncertainties from a literature point of view, that there is not that literature. So we should be looking forward to developing that literature, particularly as central bank, and of course Bank Indonesia, like I said, takes a lead role in the region on monetary policy research. So this is one area Bank Indonesia, I'm sure, will take a lead role in developing that body of literature. Professor Badri.
Hello, good morning everyone, and I'm Badri Narayan from Indian Institute of Technology. I'm currently professor at Indian Institute of Technology, Hyderabad, as well as I am also a member in APEA, Asia Pacific Applied Economic Association. So I'm thankful to all the eminent experts. It's a very nice and wonderful talk. I have two questions. My first question is regarding to the central bank, particularly the bank like in Reserve Bank of India. Last year they have announced the digital currency. At least they're thinking in addition to the the national currency. So in those scenario, how you think that the country is going to tackle the inflation targeting, or let's say thinking whether the country should move from the systematic monetary policy to conventional monetary policy to, let's say, unconventional monetary policy. What would be your take on this? That's the first question. And my second question is regarding to, there are many poor countries, particularly they do not have access at the moment in terms of financial inclusions. But the moment we are introducing this digital currency, that might again create some sort of inequalities, particularly in the emerging market economy. So in those scenario, what is going to be the solution? In the sense, one way we are thinking about digitalized currency, the other way it might lead to inequalities. Already the developed countries are getting advanced in terms of trade, particularly trade in services is going to create unbalances here. So that's again, I'm just thinking to understand some sort of solutions, and what is your solution to this, the inequalities issues. Thank you.
Yes, please, go ahead, Professor.
Yeah, so these are important points. So there are 2 points. One is, how does CBDC affect the monetary transmission mechanism or monetary policy more generally? And that depends very much how you design your CBDC. So one critical question is, will you pay interest on your CBDC, or will you, like in China, you don't pay any interest, you keep it very much like cash-like. But if you pay interest on CBDC, it has implications. You can tighten monetary policy much more dramatic. So if you tighten the policy rate, you also pay more interest on CBDC. It forces then private bank also to pay a higher interest on deposits. And this way you have way more power as a central bank to tighten monetary policy. Similarly, if you were to decide that you go negative in the interest rate, so if you want to stimulate the economy and CBDC would charge a negative interest rate, and cash becomes less prominent, then actually you can stimulate the economy also by making the negative interest rate go there, and you get around to say zero lower bound to some extent, or the effective lower bound in the monetary policy space. And that makes unconventional monetary policy less urgent or necessary, because you can work more with interest rate policy. So, but it gives the central bank much more freedom, and that also leads to some concerns. Some observers have, they might stimulate too much, they might create too much inflation once they can go for positive and negative interest rates on CBDC. But you can see already how the design of the CBDC has huge implications on monetary policy then, and whether you need unconventional monetary policy the same way as before. The second question was about financial inclusion and inequality. And of course, there's different inequality aspects to it. So one is inequality between poor and rich countries, so global inequality. And I would actually say that there's a huge opportunity for emerging economies to go to the digital space and digitalize and leapfrog certain technologies the advanced economies went through. So that's actually an opportunity for the developing economies and emerging economies to catch up more easily with the advanced economies, in particular if the regulatory hurdles or certain hurdles from the private lobby makes it difficult for advanced economies to adjust, and the emerging economies can leapfrog in a sense. So that the gap between poor and rich nations might actually shrink if it's done smartly. So if the emerging economies do it in a smart fashion. So I'm actually quite optimistic on that regard. And then there's, of course, inequality within the country, and that comes to the financial inclusion question. Can you actually also help poorer people in your country to participate better in the economic activities? And again, I think the financial inclusion is a big opportunity, and we have seen in many African countries and many other countries, also in China, that the technology, the digitalization helps to get access to loans for many small SMEs or small enterprises or mini enterprises, which wouldn't have gotten any funding before. And that makes it possible for poorer people to be part of the economic process. So there's a huge opportunities there. So if things are set up well, I think there will be some players which make a ton of money because they control these platforms, some big players, but it will also help a lot of poor people to get out of poverty. And the signs we have seen, in many of the emerging economies is actually very encouraging that this actually has positive implications. So that's why introducing CBDC, and which then competes with some of the platforms, controls the power of some of these platforms as well. And this way, you make sure that there's not a few platforms getting really wealthy, but because there's competition from CBDC, but you still have the benefits that there's some credit extension through these platforms and other things, which you couldn't do without a digitalized economy and without having all these digital elements in it.
Thank you very much. Professor Sipi, you want to comment on the inequality, financial inclusion aspect?
Thank you, Professor Badri. Just in my presentation, I have mentioned there the two models for the CBDC operation in the no matter capital market of the financial market, just mentioned by Professor Parish. I think that the first type is the CBDC issues around from the central bank to the wallet holders, and the second type is the Chinese type is we have the cooperation with the commercial bank. So the channel is from the central bank to the commercial bank and to the wallet holders. So I think that no matter traditional monetary policies and or the new new transition type like the CBDCs, I think that the need, the promotion and the good fundamental for the in the financial market or capital markets. So I think that the commercial bank is very important in the in the operation for the CBDCs. CBDC is like the case at the financial, the traditional monetary policy, no matter the monetary issues via the M1, M2, or M1B, increases the monetary policies. So the transition of the monetary policy operation then need cooperation with the from the commercial bank. So my personal comment or my personal suggestion for the BI case, if we need to run the successful or more smooth path for the to promote the CBDC in the capital market, the road in capital market or financial market, I think we can ignore the rule of the commercial bank. Thank you. It's my personal comment. Thank you. Your question, Professor Badri.
Thank you, Professor CP, Professor Marcus. Now, one of the things before we take the next question, one of the things that really worries me when I think about CBDCs is how it is going to impact the SME sector, particularly the micro enterprises. I'll give you some examples. In Indonesia, 70% of the business activity is driven by the SME sector. That includes the micro firms as well, which are basically employing less than 5 laborers. Globally, you look at advanced economies such as the UK, 70 to 80% of the business activity is generated by the SME sector. Globally, even if you go to smaller island countries, point is whether you look at developed countries or developing countries or emerging markets, on average, research shows that 70 to 80% of the business activities and about 60 to 85% of employment comes out of the SME sector. What evidence also suggests is that one of the main constraints for the expansion or reinvestments in the SME sector is related to digitalization, because it is a costly process for smaller firms to actually invest in the digitalization infrastructure. When we talk about developed and developing countries, this issue becomes even a bigger challenge, because in the developing countries, that digital infrastructure is already weak. When we talk about digital infrastructure, it's not only about the number of people who have got mobile phones or the number of people who can access internet. It's also about e-governance, it's also about e-commerce, it's a whole range of issues when we talk about digitalization. So my concern, in light of the existing literature that is there, is how does this, the digital currencies make the SME sector inclusive or integrate? Because that will be a big challenge. At the moment, we are talking about digital currencies from a very, very macro point of view. And essentially assuming that the trickle-down effect of digital currencies would be smooth. But that is very, very unlikely, because 70 to 80% of our economic activities are generated by the SME sector, who, in light of the pandemic, as we have seen, have been exposed to the higher cost of doing business, right? So to expect them to transform and invest in the digital infrastructure would be adding another layer of cost to these businesses, and therefore it threatens their survival. So I'm just posing this question. I have no expertise in this, and I think it also opens up that possibility of new research in this particular area. So if there is any feedback from our two speakers, that will be welcome to enhance our understanding. Thank you. Anyone wants to comment on that?
I can briefly say something. So
yeah,
I would separate two things. One is, I think digitalization itself, it's not clear that it actually increases the fixed cost you have to come up with upfront. So there are a lot of mini, micro entrepreneurs who you just need an iPhone or a smartphone, and then you can actually start an enterprise, which you couldn't do before. So, and if you look at, so going to the Chinese example to some extent, if you look at Ant Financial, there are a lot of micro lending and activities to SMEs happened because of these new digital platforms, which made entry much easier. Or if you think about starting a certain business, you can be part of a cloud from a big platform very easily. So the entry costs are very low. And to set up a platform is very high. So to become a big platform provider, that's very monopolistic and it's very high. But to become an individual player, to enter in a particular marketplace, I'm not sure that this actually is so much more difficult now compared to 10 years ago. I think it's actually the cost went down. That's my take. So I haven't looked at the data, but that's my take. So entry costs are going down, and that's also why you see there's positive side effects from these platforms coming into play. So the second point is that these platforms, they enjoy a certain monopoly power because there are network effects from this platform. It's a platform economy thing. And then the question is, how do you regulate these platforms and how do you compete with the platforms? And the platforms that provide, of course, also financial services. And by a CBDC is essentially a way to compete with these platforms. And this way you take a little bit of the monopoly power of the platforms away. And that's the way I see in some light also CBDC. It is essentially also a competition with these platforms. But perhaps my colleague, Professor Zhang, can probably say much more because he lives in China, so he knows much more about the situation there than I do.
You want to add, Professor Sipi? You want to add something? No, okay. I have time for one more comment or question, and then I'll summarize. Yes, please. Yeah.
Okay, thank you, Professor Pares. Yulia Indrawati from Universitas Jember. My question addressed for Professor Markus. I think that privacy paradox is the big challenge when we implemented to CBDC. How to make sure that the objective function of central bank does work with CBDC, Professor? And the second question addressed to Professor Chun Ping Chang. Could you explain how the framework of green bond in CBDC framework, CBDC perspective as an unconventional monetary policy is office to conventional monetary policy, Professor? Because we always get a big problem how to measure of the green finance in the perspective of the monetary policy or maybe in CBDC. Okay, thank you, Professor.
Thank you for your question. I'll give each of our speakers 30 seconds to provide a quick response. We are approaching the conclusion of this. So, Professor Markus, you go first.
Thanks a lot. So, yeah, privacy is a big issue. Privacy paradox is a huge issue as well. There are certain countries where cash is very prominent and where, perhaps there's little trust in certain government institutions. So the question is, do you trust more government institutions or do you trust more private institutions? So and that's very different from country to country. It's very surprising. If the government has a lot of trust, and then actually CBDC is not the issue, because then the government can observe a lot of things. But of course, if you go to intermediaries and the private institutions, private intermediaries will see things as well. So you have to, I think, differentiate from country to country because the trust level is either, in US, for example, there's a lot of trust towards private entities that people are willing to give data away to private firms, but they might not give it away to the government. In other countries, it's the other way around. So it's very different. But in any case, for CBDC and any digital currency, what you need a clear governance structure because it's not ingrained like it is for cash. Privacy is not ingrained. And that's what you have to really have some Chinese walls. You have to carve up the ledger. In certain parts of the government can only see certain elements of the ledger and nobody sees the full picture. So I'm just repeating what I said earlier. I think that's very important that you design the governance structure in such a way that nobody can see the whole picture and you can only see part of it. And if there is some crime, some bigger crime, then you have to go to the court and then the judge has to decide whether you can put these jigsaw puzzles together and then prosecute.
Thank you, Professor. Thank you, Professor. I'll stop you there and give Professor Sipi your quick response to that.
Thank you. Thank you. Your questions. I think that there have many benefits for the promotion for the CBDC. For example, the higher to keep the transaction securities or the lower the transaction cost. But because we just report the statistical summary data only the 2020 to 2021. So I just mentioned in my slide, my conclusion, I think that we have no serious evidence we can guarantee higher CBDC will promote green finance and then promote the sustainable development. because my research is concerned for the environmental performance and environmental protections. So I think that there have the many factor influence the increases for the green finance in those pirate cities in China. So I think that I just mentioned or announced one issue. They have the one of the benefit for the promotion of the CBDC.
Thank you, Professor CP, for your response. I just want to acknowledge, as we have come to the close of this, and in closing, to acknowledge that there have been questions on online on chat, and I've been reading them. But I can see that all of these issues been raised from. The relevance of mobile money to inflation targeting, zero interest rates, and the need to account for social characteristics in digital currency space. So I think all those issues have been addressed already. So I'm not going to ask those questions again, but I hope that you've got your answers. Thank you very much to, again, our three distinguished speakers this morning, and of course, following on from the opening remarks by the governor. I think we've had a very fruitful discussion. There's a lot of new ideas that have come about, which basically has given us an agenda for future research. Certainly something that we will discuss at Bank Indonesia about how we take some of these ideas forward, given the work that is already, as alluded to by the governor, that Bank Indonesia is leading a lot of this research already. So we want to build on that, and your thought-provoking ideas have really given us that momentum to start that discussion and develop an agenda for future research, which hopefully some of it we can publish in BMEB. Thank you very much to the audience for your patience and for your active participation as always. Thank you.